schedule was like that. I was handling that is maybe the last 3 or 4 sessions. The first session we started about changes in the credit related matters for last 1 year with a PowerPoint presentation and question answer discussion. We have completed it. Then I started with 125 questions, objective type questions, general matters, circulars issued by the bank, important circulars from October 2024 to July or August 2025. So with a PowerPoint presentation that we have discussed, maybe around 85 questions we would have discussed in the through the that is online classes. Now regarding the remaining questions, answers, all the 125 questions and answers, it has been already uploaded in CBOA website, and my PowerPoint presentation for the general questions also has been uploaded. Then my question and answer with answers, I'm talking about with answers, my question with answers with regard to the general credit matters and the PowerPoint presentation already uploaded. Now for the general matters, remaining 45 questions which we have to discuss, I am leaving it to you because I uploaded it already with the answers. Now the circular numbers are also there, so I have covered all the points over there. So you please go through. For the general matter, let us not spend much more over time. So today, maybe now it's around 2:30, so I don't want to delay you beyond 5 or 5:15. So I will cover this compromise policy of the bank. If some time permits after that, so I'll be taking up the recovery matters. So if I am not able to complete the recovery matters today, that is the organizers may give me a slot in the evening during the course of the week, maybe mostly on Wednesday. So we will see that. Otherwise, we will leave it over that. Now, the compromise policy of the bank for the year 25-26. So we are not going to, now we are going to discuss a question paper and a PowerPoint presentation. Already it is made, uploaded in the CBO website. Okay, sir, we'll go with that now. So the compromise policy of the bank is discussed in the policy circular 25/2025, and the same thing was reproduced in the circular IC also, internal communication HO circular 218/2025. From that, so we are going to discuss the compromise policy of the bank. The compromise policy is nothing but the OTS policy of the bank. So the OTS policy, a normal general OTS of the bank is there. Then that is supported by special OTS policy of the bank. So now we will go by the normal general OTS policy of the bank. There we will discuss so how when the borrower comes for OTS, how much we are asking the borrower to pay. So what is the formula we are working out, and bank is telling to the borrower, you pay this much, and how much what he is not able to pay, what is that is called the sacrifice. Who has power to settle the OTS? Okay, so there is a change as compared to last year, so that also we will discuss. The delegation of power for sanctioning OTS we'll see. Then timelines given for that is settling the OTS by the borrower. If it is done within the timeline, any interest to be charged, or if it is done beyond the timeline, so any compensation can be given for the borrower for the delayed payment, so etc, etc. Then we will go to other points in the OTS matters. Then we will see the special OTS of the scheme. So whether 4-5 special OTS. So for all these points of view, from examination point of view, we are going to discuss today. Okay, that is my idea now. So now, what is OTS? You know, OTS expansion is nothing but one-time settlement. A borrower has to pay rupees 1 crore. Bank agrees for a payment of 80 lakhs. So 20 lakhs, the bank is sacrificing from the borrower. Why bank foregoes the 20 lakhs and settles the account? Friends, you know, if you keep that 1 crore in the books of the bank, bank has to keep provision depending upon it is a substandard asset or doubtful asset or loss asset. Bank has to keep provision. Not only that, follow up and so many issues are involved. For that, there is a cost is involved for the bank. For keeping that 1 crore NPA, there is a cost is involved for the bank. Keep that in mind. So on the other hand, if we write it off, that 80 lakhs, if the borrower pays and the bank writes off 20 lakhs, so out of that getting for that 80 lakhs, bank gets a benefit. So the benefit the bank is going to get for getting that 80 lakhs is more than the cost bank is incurring to keep that 1 crore NPA in the books of the bank. Since the benefit benefit is more than the cost, bank is writing off that 20 lakhs. The benefit is more than the cost. In economic terms, we call it as an opportunity cost. Generally, they ask in the examination, the OTS or the compromise formula of the bank is based on what cost? The cost is the opportunity cost. What is opportunity cost? The bank keeps the account in NPA. For that, what is the cost is involved? The bank is going to get some money from the borrower and write off a portion. By getting the money and writing off that portion, what is the benefit the bank is going to get? So how much money it has to get, that depends upon the formula. So then the money bank is getting, a portion bank is writing off. So for that, that is a benefit for the bank as compared to keeping the account in NPA. The difference between the benefit and the cost is called opportunity cost. So since the benefit is more, since the opportunity cost is more for the bank, so that is bank goes for OTS proposals or compromise proposals. Okay, sir. Now next slide we will go. So now we are going to see the compromise policy guidelines of the bank, normal general OTS proposals of the bank, other than the special OTS scheme of the bank. Okay, so that is why there is a special OTS other than a normal OTS. In the case of the normal OTS, the money which the borrower has to pay will be something more than the money the borrower has to pay under the special OTS scheme. If you fix your borrower under the special OTS scheme, why bank comes out with special OTS scheme? Because in those sector, the NPA accounts, particularly the small value NPA accounts, are huge. So since the bank wants to clear all those things, bank comes with the special OTS scheme. In the special OTS scheme, the sacrifice the bank incurs is more than the sacrifice the bank incurs in the normal OTS scheme. There in the special OTS, even though the sacrifice is more, the opportunity cost is more. That is why bank goes for the small value accounts a special OTS every year. So we will see the cover the special OTS also today. Now the first few slides what we are going to see is the compromise policy of the bank other than the special OTS. So to bring an account under the normal compromise policy of the bank, the account should have completed as NPA for a minimum period of 6 months. So before completion of 6 months, the accounts cannot be brought under normal compromise proposal. So from the date of NPA, they should have completed NPA 6 months, and normally it is a recovery or legal action initiated account. Okay, that is one point. Second, what is that? How the compromise, how the bank is telling this much compromise money you have to pay, then we will relieve you. How the compromise formula is worked out. So the compromise formula is worked out taking into three categories. The first one is, so the realizable value of the security. If the bank disposes the security today, what is the value the bank will get? That is called the realizable value of the security. The realizable value of the security will be available in the latest valuation report. The latest valuation report should not be more than 1 year old at the time of OTS proposal. So the latest that is a valuation report which is given by the panel valuer means at the time of settlement it should not have been completed 12 months. It should be less than 12 months. So in that, what is the realizable value of the security given by the panel valuer? So if the borrower is going, that is as per the formula, so if the realizable value of the security alone is sufficient to recover the contractual or decretal dues in full. Contractual means as per the contracted rate of interest along with the penal rate, if any, it has to be collected. That is the contractual amount. Decretal amount means in case of a suit filed account, if the suit is filed already, court has given a decree. As per the decree, what is the amount the borrower has to pay? So if the realizable value of the security alone is sufficient to cover the contractual dues or the decretal dues, how much the borrower has to pay in compromise. That is first formula. The second formula, so the realizable value of the security alone is not sufficient to cover fully the contractual dues or the decretal dues. Only if you take the net worth of the borrower and the guarantor, only along with the net worth of the guarantor and the borrower, if you take only the contractual dues or that is your decretal dues will be cleared in full. In that case, how much we will ask the borrower to bring for compromise. The third one is neither the realizable value or the net worth or both put together are not sufficient to cover the contractual dues or decretal dues. In those cases, how much money the borrower has to pay. So now that is the compromise formula. So for the three cases, let us see what is the compromise formula, and all other things will follow after we see the table. So the table, first table is, if you see the first table, the first table says, so realizable value of the security is sufficient to recover the contractual dues or decretal dues in full. RVS means realizable value of the security. We say the borrower is eligible to get 8 points. Don't worry much about the points. Next slide I will tell, you will understand. So when the realizable value of the security alone is sufficient, what is realizable value as given by the panel valuer? The valuation report should not be more than 12 months old. In that, what is given by the panel valuer as the realizable value of the security, you see. If the realizable value alone is sufficient, the contractual dues, total amount the borrower has to pay as per the agreement or the decree given by the court, it is sufficient, then ask the borrower to pay the full amount. So when the borrower says, I cannot pay the full amount, you tell me something less than the full amount what I have to pay. Then we have to tell to the borrower, so you please give me the book liability plus simple interest at MCLR on 1/4/2025 plus 1.50% per annum, simple to be recovered. So when the borrower comes for OTS, you take the that is valuation report, which is not more than 12 months old, and find out what is the realizable value. If the realizable value is sufficient to cover fully the contractual liability or the decretal amount, then ask the borrower to pay the full amount. If the borrower says he cannot pay the full amount, ask him to pay the book liability plus simple interest on MCLR on 1/4/2025 plus 1.50%. That is at least the minimum amount the borrower has to pay. Now, what is book liability? So the book liability is not the liability which the mirror account shows to you today. So even though the account becomes NPA, if you see the pass sheet of the borrower, every month or every quarter, interest would have been debited there. That is not the book liability. Book liability means on the liability on which interest stopped. So interest, that is interest debit stopped from in that account on a particular day, that is called the book liability. That means on the date of becoming NPA, there is a liability in that account. So what the system will do on the date of becoming NPA, if all that is, account will become NPA if 3 months interest or installments not paid. So already 3 months interest would have been debited to the account. So on the date of becoming NPA, whatever the interest is already debited will be reversed to that account. To the particular SL, it will be reversed back. So that liability after reversing the unrecovered portion for the last 3 months, because only when the last 3 months interest or principal not recovered, the account will slip to NPA. So in the last 3 months, system already would have debited the interest. That interest reversal system will take place. So there are certain business intelligence reports or business object reports in the bank that will give the book liability of the NPA account. So take the book liability as per the intelligent report or business object report. On that, you work out the MCLR on 1/4/2025 plus 1.50% per annum, simple interest, and you tell the borrower, so if you are not able to pay the full, your realizable value is sufficient. If you are not able to pay the full money, pay at least this money. This is the formula. So by doing this formula, recovering the money, the bank's opportunity cost is more. That is why bank goes for your compromise proposal. Coming to the next one, if the realizable value alone is not sufficient, only if the net worth of the borrower and guarantor are sufficient, then we have to ask the borrower to pay book liability plus simple interest at MCLR on 1/4/2025 minus 0.50%. So calculate the book, take the book liability, find out the simple interest at MCLR. You take the MCLR on 1/4/2025. From there, you subtract 0.50. Then you calculate the simple interest on this book liability from the date of stoppage of interest. So calculate the interest and ask the borrower, this is the money you have to pay for settling the OTS for your proposal. Then how to know the net worth of the borrower and the guarantor? The chartered accountant has to give a certificate giving the net worth of the borrower and the guarantor. The chartered accountant who gives the certificate, that certificate should contain a number called UDIN number. What is the expansion of the UDIN number? Unique document identification number. When we go for a medical certificate, doctor gives a medical certificate and puts a seal. Under that, he writes the registered number. The registered number is given to the doctor by the Medical Council of India. Similarly, for a chartered accountant, the UDIN, that is, whenever the chartered accountant gives a certificate to anybody, including the audited balance sheet, he is supposed to use his password and go to the website of Indian Institute of Chartered Accountants, log on there and upload the statements given by him to anybody. The moment he uploads the statement over there, it gives a unique number. That number is called unique document identification number. So that number, the auditor, chartered accountant has to give in the net worth certificate mentioned there and give to the borrower. When the borrower comes and gives to us, we should log on to the website of the Chartered Accounts of India particular website, and when we put that, type this UDIN number, whatever he has given would have reflect that. We have to compare whether it is the same. You got my point? So the net worth of the borrower and the guarantor, how to find out? Not just orally inquiring. A chartered accountant certificate with the UDN number should be given, and when net worth and the RVS is sufficient, we will ask the borrower to pay this much under the compromise formula. The other one, so the realizable value of the security plus the net worth of the borrower and the guarantor, both of them are not sufficient. The borrower gets 4 points, and in that case, no formula. We should be able to, that is, have a skill for negotiation, and we should try to get the maximum amount possible. Okay, sir. So when the realizable value alone is sufficient, book liability plus MCLR on 1/4/2025 plus 1.50. And the other case is when realizable value net worth alone is sufficient, then book liability plus MCLR on 1/4/2025 minus 0.50% simple interest. The last one is no interest, recover the maximum. If you see the slide over here, I have given something in 2.50 and 1.50 here. That is 1 year MCLR plus 2.50, 1 year MCLR plus 1.50. What is the different color? So this different color 2.50, 1.50 is whenever we go for settlement, compromise proposal with a willful defaulter, or when we go for a compromise proposal in an account where fraud is noticed. In those cases, we will ask them to pay certain higher rate of interest. Now the next question is whether we can settle accounts under fraud cases or willful defaulters compromise. Yes, we can bring those borrowers also under compromise. The delegation of authority varies higher level in the bank, that we will see separately. Though what we should go in our mind is the willful defaulters and the fraud cases also accounts can be settled under OTS. However, whatever the law due course has to take place, compliant with the CBI police, those cases will continue separately. But the borrower, we will take that money, our liability we will remove from our books. But all other law enforcement agencies issues will continue, that we will not enter into that picture. So whenever we settle the compromise for the fraud cases and these type of cases, 2.50 and 1.50. Okay, that point you keep in mind. The next point is, now I told you On the book liability, you have to calculate the simple interest on MCLR plus something or minus something. Okay, so till what time you have to calculate the simple interest? Borrower comes for OTS today. From the day on the book liability, that is from the date of stoppage of interest on that account, whether till today we have to calculate the unapplied interest, that is interest on simple interest. I told you know whether we have to calculate that interest to ask him to pay the money, or up to what point we have to that is calculate the interest, simple interest. You see that's right. Simple interest to be calculated on reducing balance from the date of stoppage of interest on the account becoming NPA till the end of the quarter, immediately prior to the date of submission of the OTS proposal. Example, NPA date is 27/9/2024. Stoppage of interest on 27/6/2024. OTS date is 10/10/2025. Now the question is stoppage of interest on 27/6. NPA date is 27/9. I told you when the account becomes NPA, previous 3 months interest will be reversed by the system. So the stoppage of interest for that account should have been 3 months before that, 27/6/2024. From the date of stoppage of interest, so when he comes for OTS, 1 year MCLR plus 1.50 minus 0.50, etc. From the date of stoppage of interest till the OTS date, or till which date. So from the stoppage of interest till the end of the previous quarter, that is the date on which he is coming for OTS. He is coming for OTS on 10/10/2025. So from the date of stoppage of interest, you calculate interest till the previous quarter. For 10/10/2025, the previous quarter is 39/2025. Like that, interest to be calculated, you have to find out the book liability, ask the borrower to pay book liability plus the simple interest. Okay, sir. So simple interest from 27/6/2024 till 39/2025 to be calculated to find out what is the amount the borrower has to pay as per the compromise policy of the bank. The net worth certificate to be given by chartered accountants with unique document identification number, UDIN number. I explained to you what is UDIN number. The next one is at the time of negotiation for OTS for non-willful defaulters. So normally we will go for non-willful defaulters. In exceptional cases, willful defaulters also will be considered. At the time of negotiation for OTS for non-willful defaulters, if we come to know that the borrower has already died, or the sale of property is going to be very difficult due to a lot of litigation on that property, or the natural calamity has happened like COVID, etc., which made the borrower to close the business. One e-auction already completed for that account. There are no takers. The account, the property was not able to be sold. So, if any one of these 1, 2, 3, 4, if any one of these things happened in that account at the time of settlement, or all of them has happened place, any one or any two, any three, any four, when all of them are taken place in that account, then we can reduce 2 points for the borrower. Now I will show it to you, you will understand. See, I told you realizable value of the security is sufficient to cover the contractual dues. This is the money the borrower has to bring under the compromise policy. But at the time of settling the compromise, we find out the borrower has died. In that case, the points the borrower, we will not give 8 points to him. We can reduce maximum 2 points to him. When we reduce 8 points minus 2 points, he will come in this category. Even though the realizable value is sufficient to cover the contractual dues, since the point the borrower has got only 6. Why the borrower has got 0.6? Because the borrower died, or the account has been, the business stopped due to natural calamity, or one e-auction already filed. Because of these cases, 2 points will reduce to the borrower, even though the realizable value is sufficient. So we will ask the borrower to pay as per the second formula. You got my point? So at the time of negotiation, any one of these things have happened out of the 4 things, or all the 4 things happened, or any 2 or 3 have happened. So we will reduce maximum 2 points from the borrower and ask the borrower to give this formula and not this formula. Similarly, let's assume the borrower normally sets in this category. Realizable value plus net worth is sufficient. He gets 6 points. But at the time of settlement, we find out the borrower has died. then we will make the point to 4. Instead of applying this formula, we will apply this formula and try to recover the maximum money from the borrower. Okay, the maximum points you can reduce is 2 points can be reduced. From 8, it can be brought to 6. From 6, it can be brought to 4. So minimum mark should not be below 4. Okay, this is the way. Wherever any one of these things happen, this is the way you have to work out the interest and ask the borrower to pay the compromise amount. Okay, sir. Now, so party not able to pay the amount as calculated above. Is there any way out? So what we told, so that is when the borrower comes for negotiation, you see the realizable value, you see the net worth, all those things, and you say this is the formula. Even after telling the borrower as per this formula you have to pay. First we say realizable value is sufficient, pay the full money. He says, I cannot pay. You are telling him pay as per the formula. He says, I cannot pay even from the formula. So even though the borrower is not able to pay as per the formula, whether settlement we can go in for the borrower. Yes, there is a way out. In exceptional cases, when the borrowers are not able to pay the OTS amount as calculated by the formula, OTS proposals to be placed before whom? Next higher authority up to circle head powers. So OTS proposals coming up to circle head powers, so to be done only if it is as per the formula. If the borrowers are not able to pay as per the formula, OTS proposals up to including circle head powers to be referred to head office only. So in the case of head office powers, respective sanctioning authorities can sanction though the borrower is not able to pay as per the formula. In exceptional cases, so OTS proposals when the borrower is not able to pay as per the formula, so it has to be placed before the next higher authority up to including circle head CSE powers. HO power accounts to be placed to the respective sanctioning authority. Okay, so then this is the one case which has to be sent to HO. When we'll send it to HO, in circle, nobody is having the power if the borrower wants to pay less than as per the formula. In HO power accounts, respective sanctioning authority can sanction even though the borrower is not able to pay as per the formula. If the borrower is not able to pay as per the formula, nobody, including the circulated CSE, has power to sanction the OTS. Then second point. Accounts with book liability of rupees 1 crore and above, where adequate securities are available to cover the contractual decretal dues. So formula number 1, realizable value of the security is sufficient to cover the contract. So remember the first formula. So borrower comes under the first formula category. He says, I will pay as per the formula. Or he says, I cannot pay as per the formula. Whatever he says, even though the realizable value of the security is sufficient to cover the contractual dues or decretal dues, and if the borrower is willing to pay that money also, but if the book liability in the account is 1 crore and above, those proposals also should be referred to HO only. Again, I repeat, accounts with book liability of rupees 1 crore and above, where adequate securities are available to cover the contractual decretal dues and parties are willing to pay either as per the formula. Anyhow, when they pay as per the lesser, you have to send it to the next higher authority. In circle, nobody is having the power. Here, the parties are willing to pay as per the formula. So even though the parties are willing to pay as per the formula, in the circle, nobody will have the power if the book liability is 1 crore and above. So if the book liability is less than 1 crore, if the parties are willing to pay as per the formula, depending upon the delegation, even in the circle, it can be processed. Since the book liability is more than 1 crore and above, even though the parties are willing to pay as per the formula and not as per the formula, the proposals to be placed to HOCAC only. No authority up to circle head power except under special OTS. Okay, sir. Good. Now, in respect of CGTMSE covered accounts, whether OTS can be settled. Before, so you know, for that is CGTMSE, so first you have to send the claim. They will give you 60% or 75% of the claim amount. Then after 2 or 3 years, depending upon OTS etc. We will send the second claim. They will settle finally. So in the case of a CGTMSE covered accounts, whether OTS is applicable, you have to see PDC, CGTMSE, we have claimed the amount due from the CGTMSE, or the amount has come. If it is there, whether second claim we have made, everything we have to see before going in for the OTS. In respect of settlement of CGTMSE covered accounts, before receipt of the first claim amount has not yet come. We have claimed or not yet claimed, whatever it is. The first claim amount is yet to come from the CGTMSE. Then how much, whatever may be the formula, this formula, that formula, we should tell the borrower. So that is, we should tell the borrower as per the formula, etc. only. We should see as per the formula what is the amount he has to pay. Then we should see what is the CGTMSE covered money for that account. When the before the receipt of the first claim from CGTMSE, whether we have claimed or not yet claimed. So the compromise amount should be not less than the guaranteed amount. So the compromise amount should be not less than the CGTMSE guaranteed amount. You know, no, the maximum guarantee amount goes to 90% for the women enterprise or transgender, etc. That we have seen the CGTMSE in that account. So before receipt of the first claim from the CGTMSE, the minimum OTS amount we should ask the borrower to pay is, so that is the guaranteed amount to be recovered as per the under OTS. Already, if the first claim has come, after the receipt of the first claim amount, borrower comes for OTS settlement. In such cases, maximum possible amount to be recovered based on the net worth of the borrower, realizable value of the security, etc. So this is with regard to CGTMSE covered accounts. The third point. Now, I told you, in the case of willful defaulters and in the case of fraud cases, authorities are there to permit OTS in the bank. Who is the authority to settle OTS proposals of willful defaulters and fraud cases? Management MC means management committee. We know we have, that is that is RO head CAC. Then we have various CACs, including top is circle head CAC. Then we go HO, CGM, GM, HO, CAC. Then ED, HO, CAC. Then CAC of the board. And the final authority is MC of the board. Okay, even for loan sanctions or for OTS proposals, the MC of the board is the topmost authority. Okay, so in the case of willful defaulters and fraud cases, in exceptional cases, after all recovery measures are exhausted, can be approved by MC of the board, management committee of the board. So after it approved by the management committee of the board, then it has to be placed to the CAC of the board. So this sentence they added this year's OTS policy. So all willful defaulters and fraud case to be placed before the MC of the board, provided no recovery is possible after exhausting all recovery measures. And that note, after approval of the MC of the board, to be placed to the CAC of the board for information. Next point is whether OTS can be considered for ex-employees of the bank. Okay, for employees, no OTS. For ex-employees, whether OTS can be considered. For the loans sanctioned to them, as well as for the loans in which they are co-obligant guarantor, provided such loans were sanctioned to them after they ceased to be in the services of the bank. Suppose ex-employee availed a loan after he came out of the service of the bank, or after he has come out of the service of the bank, he stood at a co-obligant and guarantor for a loan availed by somebody. If those loans go bad, so whatever applicable to the normal customers, so OTS can be settled. On the other hand, loans sanctioned to the employees while they were in service. While they were in service, so then they retire. So when that, for example, you take an educational loan to a board of an employee, so that educational loan will continue even after he retires, because the guarantor of his tenure or housing loan was sanctioned during the tenure he is as an employee. He retired from the services of the bank. After he retires from the services of the bank, due to some reason, let us assume those loans become bad. In such cases, whether OTS is permitted for those loans. For loans sanctioned to employees or to the loans for which they were co-obligant guarantor when they were in service, OTS proposals to be permitted by CAC of the board only. No authority other than less than the CAC of the board has power to sanction OTS to employees for that is the loans which they availed when they were in service, the CAC of the board only to permit OTS. Then now let us see the questions whether we are able to answer the question. I will run the question in the screen. Already it is uploaded over there. I will run it. So let us see. Let us see whether we are able to answer the question. So this is the first question, sir. This is the first question. I'll increase it upward to some extent. Okay, good. So compromise policy 25-26, there are around 12 questions. I try to cover all the PowerPoint presentations in these questions. Please go through. These questions are little complicated, little tricky. Okay, like that. In beginning itself, I will tell we have to apply our mind. Subject in depth we should know. Which is correct? Compromise policy 25-26, point number 1. Which is incorrect? Which is an odd man out? Which is wrong? Which is incorrect statement as per loan recovery policy 25/2025. Account should have completed 6 months from the date of NPA for OTS other than special OTS. Yes, that is a correct statement. Point number B. When realizable value of the security and net worth of the borrower and guarantor, realizable value of the security and the net worth of the borrower and guarantor is sufficient to cover the dues, minimum compromise amount is book liability plus 1.50 simple interest at MCLR on 1/4/2025 for willful defaulters and fraud cases. Yes. So if it is not willful default or fraud cases, it is minus 0.50. Point number C. When parties are not willing to pay the compromise amount as per the formula, the proposals to be sanctioned by next higher authority. For settlement of accounts with book liability of 1 crore and above, the proposals to be permitted by head office. None of these, which is not correct. So point number 1 is correct. Point number B is correct. Now you have to tell me whether point number C is correct or not. What is point number C? When parties are not willing to pay the compromise amount as per the formula, the proposals is to be sanctioned by next higher authorities. You see what I told you? If the parties are not able to pay as per the compromise formula, proposals up to including circulate CAC only to be placed before the next higher authority. Proposals of HO to be placed to the respective sanctioning authority. So what the sentence says, you read the sentence, when the parties are not willing to pay the compromise amount as per the formula, proposals to be sanctioned by the next higher authorities. No, not all proposals. It should have been the proposals up to including circulated CAC to be placed before the next higher authority. If that point was there, then it is a correct statement. So point number C is not a correct statement. Point number D. What is the point number D? For settlement of accounts with book liability of rupees 1 crore and above, whether the borrower pays as per the formula or not as per the formula, all proposals to be permitted by head office. That is correct. So question is, so answer is none of these. None of these, none of them are not correct. So the question is, which is incorrect statement? For question number 1, point number C is an odd man out. It is an incorrect statement. It is false. Okay, question number 1, point number C. Question number 2, which does not, okay, so this I have not yet covered. This I have not yet covered. Now we will go to the slide now. Because I have made only a small number of questions. The time is running out now. Okay, sir. Now, there is a concept called unapplied interest for OTS purpose. Unapplied. So, first one is what amount he has to pay. We have a formula. So, that is not unapplied interest. You forget it. What amount the borrower has to pay. That is the, we were finding out book liability plus what amount the borrower, what interest the borrower will pay. We will ask him to pay that amount. That is for compromise amount. Now, there is a formula called unapplied interest for OTS, that is for the internal consumption among the sanctioning authority. This should not be told to the borrower. What is that unapplied interest? So, the unapplied interest is not the contracted interest and it is not the decretal interest. Unapplied interest is something different. So, to find out the sacrifice amount in that account, we use a formula for working out an unapplied interest. What is unapplied interest for OTS purposes? The unapplied interest for OTS purposes depends upon whether it is a substandard asset, doubtful asset, or loss asset, whether it is a decreed account or a non-decreed account. Based on these two categories, what is the category of NPA and whether it is a decreed NPA or non-decreed NPA. Based on that, we are going to apply a formula and calculate an unapplied interest for that. Calculation of the unapplied interest is not as per the contracted rate of interest with penal rate, if any. The unapplied interest is not the decretal rate of interest. It is something different. So we will see what is the unapplied interest in the coming slides. So from the date of stoppage of interest, so when the borrower comes, you say this is the money you have to pay as per the formula. Then you have to place a note to the appropriate authority. To place the note to the appropriate sanctioning authority, we have to find an unapplied interest. So for the internal purpose only, this unapplied interest calculation is there. Now, what is that unapplied interest? From the date of stoppage of interest, sorry. From the date of stoppage of interest till the end of the quarter, immediately prior to the date of submission of the OTS proposal, which we already saw. It is for internal use to determine the sanctioning authority. So, both for decreed and non-decreed accounts, as well as for substandard and doubtful accounts. For example, if an account is a substandard and a non-decreed account, how to calculate the unapplied interest for the for the internal purpose? You take 1 year MCLR on 1/4/2025 plus 1.25%. You take 1 year MCLR on 1/4/2025 and plus 1.25%, calculate on the book liability. Or you take the contractual rate as per the agreement, what is the rate he has to pay along with the penal rate. What is the penal rate for NPA? Penal rate for NPA is 2%. Penal rate for NPA from the date of becoming NPA, it is 2% is the penal rate. So we won't use the word penal interest for all the cases in the bank from 2020-24. We use a concept called the penal rate. What is the penal rate for NPA accounts? So 2% additional interest on the outstanding liability. Okay, so 1 year MCLR on 1/4/2025 plus 1.25 you find out on the book liability. Then or you apply the contractual rate including the penal rate any. So that is penal rate any on simple basis on the book liability. So you take simple interest on MCLR on 1/4/2025 plus 1.25. Okay, then you take the contractor rate, penal rate. So what is the rate? Between the two, whichever is less, we have to apply for this account to work out the unapplied interest. If the account is a substandard decree, how to calculate the unapplied interest? The above rates till the date of, so you take either 1 year MCLR plus 1.25 or the contracted rate plus penal rate, if any, whichever is less, you apply till the date of filing the suit. And from the date of filing the suit, the rate awarded by the court. What is the rate awarded by the court? You find out. Or so that is the rate awarded by the rate court or the rate as per this formula, whichever is less you have to apply. So when it is a substandard decreed account, the formula is 1 year MCLR plus 1.25 or contracted rate with penal rate or the decretal rate, whichever is less is to be applied for the substandard non-decreed account for calculating the unapplied interest. If it is non-decreed account, to calculate substandard non-decreed account, that is unapplied interest calculation is 1 year MCLR plus 1.25 or the contractual rate along with the penal rate, if any, whichever is less. So when it comes to decretal, so out of the three, whichever is least, we have to calculate. So if it is a doubtful non-decreed, There I told you 1 year MCLR. What I told you, 1 year MCLR plus 1.25. We are seeing now calculation of unapplied interest for delegation purpose. So this is the method of calculating the unapplied interest. The unapplied interest is not what your mirror account is giving in your books. So this is the way you have to calculate. If it is a doubtful non-decreed account, unapplied interest, 1 year MCLR minus 1.50, or this one, whichever is less. If it is doubtful decreed, out of the three, whichever is the least rate. If it is lost non-decreed, 1 year MCLR minus 3.50, or the decretal rate out of the three, whichever is less, if it is a decreed account, loss account. I will give an example. When you see the example, you will understand. NPA on 1/10/2022, OTS proposal on 1/8/2025. Let's assume it is a substandard non-decreed account. Actually, if the account becomes NPA on 1/10/2022, so on 1/10/1/8/2025, it should have been doubtful. You forget it. Forget it for you. Remove it on that case. Now let us assume it is a substandard non-decreed account. So substandard account non-decreed. Let us assume NPA it has become 1/10/2022. The borrower comes for OTS proposal on 1/8/2025. Let us assume the contractor rate is 9%. Since it become NPA, the penal rate is 2%. So totally 11%. So 1 year MCLR on 1/4/2025 is 9.10, where it is told in your HO circular 301/2025. So MCLR on 1/4/2025 is 9.10. So you take one, so it is a substandard non-decreed account. 1 year MCLR plus 1.25. 1 year MCLR plus 1.25 comes to 10.35, whereas contractor rate with penal rate is 11%. Between the two, you have to apply the unapplied interest for calculation of sacrifice amount from the date of stoppage of interest. So when the interest stopped in that account, how will you come to know? When you take the book liability, you will come to know that is which is the date of stoppage of interest on that account. From the date of stoppage of interest account, when the borrower comes for OTS, what is the previous quarter before 1/8/2025? The previous quarter is 36/2025. From the date of stoppage of interest till 36/25 at 10.35, whichever is less, you have to calculate simple interest on the book liability. If the account is a decreed account, then you see what is the decretal rate of interest. Out of the three, whichever is the least, you have to apply to find out the unapplied interest from that borrower. Okay, the unapplied interest is something different. That is for calculating the sacrifice amount. So what is sacrifice? Once they ask the question, what is sacrifice amount with regard to OTS formulas of the bank? So book liability. What is book liability? Where it is available? I already told you. Book liability plus unapplied interest as per the formula. What is the formula? Substandard non-decreed, substandard decreed, doubtful non-decreed, doubtful decreed, loss non-decreed, loss decreed. So in that way, you calculate the unapplied interest. So what is the book liability? So you know the book liability. Business intelligence reports gives the book liability. So along with the book liability, you apply the unapplied interest. So this is for internal purpose. In fact, he has to give something more. He has to he has to give as per the contract rate plus penal rate. No, we are not asking him anything. So this is for that. This is not for asking the money from him. This is to find out who is the sanctioning authority. The money which we are asking from him is the first three formula, which I told in the first three slides. This is to calculate the sanctioning authority. So what we will do, we will take the book liability and we will take the unapplied interest as per the formula. So both this is the amount and what is the amount given by the borrower. The difference between the two, book liability plus unapplied interest calculated as per the formula minus the OTS amount offered by the party is called the sacrifice amount. So delegation of OTS proposals depends on the sacrifice amount and something else. Till last year, the delegation of the credit, that is OTS sanctioning proposal based on the sacrifice amount only. This year, they introduced something more. We will be seeing that. So this delegation depends upon not only the sacrifice amount, what is that we see. So delegation for compromise. Higher of the following authorities to permit the who has to permit the compromise proposal. You have found out the sacrifice amount first. Then you have to find out who is the authority who has sanctioned the loan, the last renewal, last sanction, who has done that. So now first you find out the sacrifice amount. Based on the sacrifice amount, certain delegation is there. Whether we have to place to that authority based on the sacrifice only, or we have to see something else. We have to see something else also. What we have to see? Who has last sanctioned or renewed the proposal? And we have to place this, there is a compromise proposal to one authority higher than the authority who has sanctioned the loan last, renewed the loan last, or as per the compromise between the two, whomsoever is higher authority, we have to place. I give an example, you will understand. So, delegation of compromise, higher of the following authorities to permit the compromise proposal. Authority based on the sacrifice as per the table. I will show you the table. Or the authority one level higher than the authority who has lost sanction, renewed the credit facilities. Let's assume. So I'll show the table to you. So this is the table. Write-off plus waiver of unapplied interest, that is called the sacrifice in the case of non-willful, non-fraud, or non-quick mortality cases. For example, if the DM is headed by an RO, DM RO head CAC is having 40 lakhs power for sacrifice, for write-off plus unapplied interest, he has 40 lakhs. DM RO CAC only has 10 lakhs power. In the case of AGM RO CAC, he has 40 lakhs power. DGM ROCAC base what is sacrifice? Book liability plus unapplied interest minus the amount offered by the party is called sacrifice. If the sacrifice comes up to 50 lakhs, so it can be placed before DGM ROCAC. If the sacrifice comes to 40 lakhs, AGM CBOA, DGM CBOA, like that it goes. In the previous slide, I told you, so if the sacrifice amount comes up to this much, to whom we have to place the proposal? Non-willful, non-fraud cases. Willful or fraud cases, I told you MC of the board only. So then fraud and quick mortality for sanctions by MC, okay, that you leave up to boards CSC, staff accounts, they would have given some back, isn't it? So for staff accounts, only CAC of the board only is having the power. So what we saw is here, so DGM COCSC, based on the compromise amount only, his power is 60 lakhs. Okay, DGM COCSC, the compromise is 60 lakhs. AGM COCSC, 40 lakhs. Let us see an example. You will understand. Let's assume DGM COCSC power for compromise is 60 lakhs. You know, DGM COCSC for compromise as per the table is 60 lakhs. In a proposal, DGM, sorry, DGM ROCS, you know, I should not have. Sorry, DGM ROCAC 50 lakhs. DGM ROCAC 50 lakhs. Okay, the sacrifice proposal for DGM ROCAC is 50 lakhs. Let's see now. Let's see now. Okay. Okay, good. So let's assume in an account, we calculated the compromise amount or the sacrifice amount, or we call it as the write-off amount. So sacrifice amount is nothing but the write-off amount. So we found out in an OTS proposal, the sacrifice amount comes to 50 lakhs. Sacrifice amount comes to 50 lakhs. So his DGM ROCSC power is 50 lakhs. So the compromise amount, or we call it a sacrifice, I should have used the word sacrifice amount. The sacrifice amount, it comes to 50 lakhs. Let's assume the sacrifice amount comes to 50 lakhs. What is that sacrifice amount? Book liability plus unapplied interest minus the amount offered by the party. That is the amount which we are going to write off from the books is the sacrifice amount. So in an account, the sacrifice amount comes to 50 lakhs. Whether we can place before DGM COC and get it sanctioned, till last year we can do it. But this year, what they have told you, you find out what is the DGM CSC's power. Okay, 50 lakhs. What is the sacrifice amount? 50 lakhs. Now, what the authorities are telling, you go one more step. What you have to see, who has lost sanctioned that loan, or who has lost renewed the loan. The last renewal of the loan is based on delegation of the credit sanction was done by DGM COCSC. So you see, so last the sanction or renewal was done by the loan account DGM COCAC. Now based on the sacrifice, it comes to DGM ROCAC. Since DGM COCAC has sanctioned the proposal, even though the sacrifice comes up to 50 lakhs, which falls on the DGM ROCAC, since the loan was sanctioned by DGM COCAC, now the proposal to be placed, sacrifice proposal to be placed to one authority higher than the authority who has lost, sanctioned or renewed the loan. That is, it has to be placed before GMCOCAC. Even though the compromise amount comes at and up to the powers of the DGM ROCAC, since the loan earlier was sanctioned by DGM COCAC, the proposal, compromise proposal to be placed before one authority who is higher than the last loan sanction renewal authority, that is GM COCAC. This year, bank has introduced this policy for delegation to whom we have to place the compromise proposal. It is not only based on the sacrifice amount, it is based on the last loan sanction amount and loan sanction authority also. Okay, sir. Good. Now you have got the answer. Now this is the table compromise. Now whether branches are having power for write-off, whether branches are having power to do sacrifice, branches are having power, that is the ELBs and VLBs. Forget about ARM branches and SAM branches. ARM branches are called asset recovery management branches. SAM branches are called stressed asset management branches. You forget those two branches. They are some types of specialized branches in NPA accounts. Other than that, VLB heads, ELB heads, and other specialized branches head. VLB head has power up to 1 lakh. ELB head and other specialized branches other than ARM and SAM branch heads have power for 2 lakhs. That power for 2 lakhs or 1 lakh is not for write-off. So, what do you mean by write-off? Write-off means a portion of the book liability is not recovered from the borrower. That is called write-off. Okay, so in the case of a VLB or ELB or specialized branches said other than SAM and ARM branches, they have power 1 lakh or 2 lakhs. That power is only for waiver of unapplied interest. What is unapplied interest? I told you how to calculate the unapplied interest, not the interest which your mirror account is giving in your books. That is not the unapplied interest. Unapplied interest for delegation of purposes is, that is as we calculated as per the formula which I told you earlier. So VLB heads and ELB heads and also specialized branches heads have power for waiver of unapplied interest up to 1 lakh and up to 2 lakhs, provided it is a doubtful more than 3 category, doubtful account more than 3 and loss accounts. Okay, and waiver of unapplied interest only. If write-off is involved, the VLB head and ELB head, other specialized branch heads cannot do. Okay, keep that in mind. Now, what is the power given to? This is the new thing. This has come in here. So now, earlier, RO and above authority only, you can place the compromise proposal. In the case of branches headed by AGM, that is ELB, VLB, or specialized branches, including ARM, SAM, till last year, they can do only unapplied interest waiver. Now, but this year, so the committee, DM, ARM, or that is divisional manager, asset recovery management, or SAM stressed asset management CAC has power for a compromise proposal up to 10 lakh. That is, they have power to sacrifice 10 lakhs. What is sacrifice? Book liability plus unapplied interest minus the amount offered by the party. Till last year, these people were not having the power. This year only, DMARM, DM SAM, CSE has power up to 10 lakhs for the sacrifice. AGM ARM, AGM SAM has power up to 30 lakhs. DGM ARM, DGM SAM branches, CSEs are having a not individual authority. Again, it is a committee. So they are having power up to 50 lakhs. You see, this is a new addition this year. So, however, before, so whomsoever has sanctioned the loan, whomsoever has sanctioned the loan. So these authorities, DM, ARM, SAM, CACSE, AGM, ARM, SAM, CAC, DGM, SAM, CAC proposals. So above these proposals, OTS proposals sanctioned by them, before releasing it to the borrower, it has to be reviewed by next higher authority at the circle office before conveying the sanction. In all other OTS proposals, it is not there. In these OTS proposals only, it has to be reviewed by the next higher authority at the circle office before conveying the sanction. Okay, sir. Now, let's quickly see whether we are able, any questions we are able to answer from the, that is from our PDF file. Question number 2, let us see. Which does not match, question number 2, which does not match with regard to the formula for unapplied interest for non-decreed cases under OTS. Non-decreed cases, okay? Substandard asset, 1 year MCLR on 1/4/2025 plus 1.25 or the contractual rate with penal rate, if any, whichever is less on simple basis on book liability. Point number B, doubtful asset, non-decreed. Okay, doubtful asset 1 year MCLR on 1/4/2025 minus 1.50 or the contractual rate with penal rate, if any, whichever less on simple basis on book liability. Point number C, loss. 1 year MCLR minus 3.50 or the contractual rate with penal rate, if any, whichever is less on simple basis on the book liability. So all match correctly. Point number C, all of these. So there should be none of these. So sorry, all of these. So whether that is 1 match correctly, B match correctly, or C match correctly. All the 3, if you see the slide, what I have discussed, all the 3 match correctly. All the 3 are correct. So for question number 2, answer is D. For question number 2, answer is D. Okay, you see this point number 3. What we discussed, I am putting in a form of a question. As per the compromise policy of the bank for the year 25-26, compromise policy of the bank, in an account, sacrifice worked out to 40 lakhs. Okay, sacrifice works out to 40 lakhs. The account is in a branch coming under RO, which is headed by DGM. The loan was last sanctioned by DGM COCAC, who is the sanctioning authority of the compromise proposal. If you see the table, you know for the sacrifice amount of 40 lakhs, so that the RO is headed by a DGM COCAC. So for the compromise amount of 40 lakhs, or sacrifice amount of 40 lakhs, AGM ROCAC has the power. Okay, the branch was headed by DGM COCAC because DM headed ROs, they have power 40 lakhs, but the branch was, the RO was headed by DGM. So if there is a DM also, it has power only 10 lakhs. So AGM ROCAC has power for sacrifice up to 40 lakhs. So sacrifice in that account 40 lakhs, the branch comes under the RO headed by DGM. Whether the AGM ROCAC can sanction the compromise proposal, that is the question. Who is the sanctioning authority for the compromise proposal? Now you have to see under whom the compromise proposal falls. The sacrifice amount is 40 lakhs, AGM ROCAC. Then you have to see who was last to sanction the loan. The last to sanction the loan was DGM COCAC. So even though the compromise proposed sacrifice amount falls within the AGM ROCAC, since the DGM COCAC last to sanction the loan, this proposal has to be placed one higher authority of the two. That means GM COCAC only. This proposal to be placed to GM COCAC. Whether options are there? So AGM ROCAC, no. DGM ROCAC, no. DGM COCAC, no. DGM RO, no. None of these. Answer for the question 3 is none of these. The correct answer is GM COCAC. Okay. Now, next what we have to go and see is this. It is okay. Now let us see the other point. So other points in OTS. So the various points are there. Questions are being asked from there. So for each point, I have not made a question because it becomes very lengthy. So I have clubbed all the points. I made 1 or 2 questions over that. The sanctioning authority of the loan should not be part of any compromise committee. Okay, one person has sanctioned, you should not be any compromise committee. If the chairman of the committee is the sanctioning authority of the loan, then to be placed before the next higher authority. There is only exception for that. HO power accounts as HO power accounts are routed through HO recovery committee. Okay. Whenever borrower wants to close the account, please this point, questions may come. Wherever borrower wants to close the account, which has already been written off in the books of the bank by way of settlement or full write-off. See, there are two things. When an account becomes NPA, you ask the borrower comes for OTS, he comes for OTS and he settles and he pays the money. Balance amount is written off. So there are some borrowers after becoming NPA, they are not coming for compromise at all. After becoming NPA, the entire liability is being written off from the book. So one is after becoming NPA, he comes for settlement balance is written off. In the second case, he does not come for compromise, he does not pay any amount after the account becomes NPA, the full liability is written off. In those two cases, after these two happenings, if the borrower comes and says, sir, I will close the full amount. So you already settled, you have paid some amount, you have written off some amount, that money I will pay now. Or one borrower is coming telling, I have not come for settlement, you have fully written off the account, I will pay the fully written off account because my name, we want it to be changed improved in the credit information company's credit information report. Okay, in that case, how much money we have to ask the people to pay, then how their status will improve in the credit information report. That is the last paragraph of this slide. Let us read, I will read, let us see. Wherever borrower wants to close the account, when he wants to close the account, which has already been written off in the books of the bank by way of settlement. Due to OTS, it was closed, or it is fully written off. Because of that, it is closed with the purpose that the CIC status to be improved from OTS settled written off. So whenever an OTS settled account is there in the credit information report against their name, it will be shown as OTS settled. Or if there is no OTS settled, if it is fully written off, their name will appear as written off. So you should also know when you download a credit information report, when it is written that OTS settled, that means there's an OTS settlement for the party in some other bank. And if you see the word written off, that means no OTS settled. After the account becomes NPA, it is fully written off. Whenever either fully written off or OTS settled is there, when the borrower comes for that is paying clearing the full liability, because if this is there, after they pay the full liability, when you update the CIC report, their names will appear there. It will not appear that OTS settled. It will not appear that written off. What it will appear? It will appear there post write-off closed, post write-off closed, or post settled closed. What do you mean by post write-off closed? It was fully written off, then borrower has come, paid the money, then it is closed. What is post settled closed? So your account was settled under OTS, borrower has come, then the settlement amount, full amount he has paid, then the account now it is closed. So the status will improve from OTS settled or written off to post write-off close. In such cases, borrower shall pay. How much the borrower has to pay? An amount sacrifice, I told you, no, in that account, the borrower has to pay the sacrifice amount by the bank plus interest at contractual rate till the date of payment of this money. So you take the OTS sacrifice amount as per the OTS note, and on the sacrifice note, ask him to pay what was the contracted rate for that along with the penal rate, if any, ask him to pay it. So in that case, these things will go. So recovery received in such accounts only if you credit by using the CBS fast path 7522 only. So it will get cleared and his name will get changed from post write-off closed. So from written off or OTS settled, it will name will change to post write-off closed, provided only handle the such accounts properly and using CBS fast path 7522. So the borrower comes today, he pays the money. So you let us assume that you are not used the fast path properly. Account is closed. But after 1 month, again the borrower logs on to the credit information report, takes his credit information report from the CIC. Still his name will appear as either OTS settled or written off only. But now he has paid the full money as per your formula. Now he will come and fight with you. Sir, I have paid the money, 1 month is over, my credit information report is not cleared. Then he will send a notice to the bank, or he will send a notice to the credit information company. When any question is asked by a borrower, any person, either to the bank or the credit information company, we have to verify all the records. We have to inform to the borrower within 30 days of receipt of the query from the borrower. If we are not replying the query within 30 days, the penalty bank has to pay to that person is 100 rupees per day. So if you do it rightly, so the mistake will not take place. That's why I'm spending some time on that. So the questions will be, when the borrower comes and settled, how it will appear OTS, which is an odd man out. Questions will come. So please understand this. So settlement and write-off, afterwards he is coming. So this is the case. The other one, OTS for fully written off accounts and closed in CBS. So when borrowers, so first the previous slide is fully written off. Borrower comes and says, sir, I pay the full amount, clear me. Here it is fully written off. For a fully written off, he is coming for OTS. He is not going to pay the fully settled down, fully closed account, fully written off account. In this case, he comes for an OTS for a fully written off account. Now, who has the authority? How his name will change in the credit information report? That is about this slide. When borrower approaches for OTS, in an OTS for fully written off accounts and closed in CBS, this will change the status from written off. In the already the old status is written off. So when he comes for a settlement, so it will appear as written off to post write-off settled. There you see, so post write-off closed. So here post write-off settled. That means the account is fully written off. Afterward, the borrower has come. So the change to post write-off settled in credit information report of credit information companies. Who is the sanctioning authority? You calculate the sacrifice and you calculate who is the last sanctioning authority. Out of the two, whichever is higher authority, like the normal OTS, has to permit that OTS also. If the facility is permitted by the MC of the board, management committee of the board, this to be placed before CAC of the board. Okay, sir? Then full write-off without any OTS. Who is authority to permit? So for OTS, we have seen various authorities based on the sacrifice amount and based on the last sanctioning authority. We have seen who is the sanctioning authority for an OTS proposal in the bank. Now, borrower is not coming for OTS. So you have to fully write off from the books of the bank, even though you put in the various recovery measures, is not coming off. So that means no say OTS settlement. You have to completely write off the book account from the books of the bank. Who has the power? If the sacrifice amount, so write off plus unapplied, a waiver of unapplied interest. So write off means book liability, waiver of unapplied interest. How to calculate the unapplied interest? Everything I told you. If that is the sacrifice amount is up to 10,000, RO head CAC can permit fully write off without any settlement. If the sacrifice amount is up to 25,000, CO head CAC can do, like that it goes. But what is the condition? For fully write off an account without any OTS, what should be the condition? There are certain conditions. This question was asked last time. What was the condition? 2-3 conditions are there. Account should have completed 5 years or more from the date of sanction. First condition is this account for fully write off without any OTS. The account should have completed 5 years or more from the date of sanction. NPA, it should have continued as NPA for minimum 3 years and above. It should be a loss asset as on 31st March of the previous year. And permission for legal action waiver from appropriate authority to be in place and marked in CBS. What do you mean by legal action waiver? All of you are aware. Even though the account becomes NPA, we should continue to get the AOD. So if the borrower is not giving the AOD, we have to file a suit. Okay, that is concept called acknowledgement of debt. There are some cases borrowers, that is an amount will be very small amount. Nothing will be available from the borrower to cover. So even though if we get an AOD, it is of no use. All those accounts, so we have to place before an appropriate authority and we have to place before an appropriate authority and get a permission for legal action waiver. Once we get a permission for legal action waiver, in those accounts, we need not get further AOD. So when you don't get the AOD, you cannot go to the court of law. That means those accounts have to be written off fully from the books of the bank. So what is the condition for fully write off an account without any OTS? The account should have been sanctioned 5 years before, and then NPA 3 years and above, should be loss asset as on 31st March. Legal action waiver permission should be there from the appropriate authority. If this is complied with, then this is the maximum sacrifice amount given by the various authorities, and authorities can write off this account fully without any OTS. Then, okay. Now, who is the authority that is for waiver of legal action? To whom we will place the note for waiver of legal action. So here for waiver of legal action, this liability is the criteria. In the account liabilities up to 50 lakhs, DM ROA and CSE will give you permission for waiver of legal action. So like that it goes. So various authorities are having power for issue for waiver of legal action. What is waiver of legal action? I already told you. So for waiver of legal action, various authorities in the bank has power. It is based on the liability in each account. Okay. Then who is the authority who can give permission for issuing the legal notice for all the accounts? ROCO heads can issue legal notice for all the accounts under the delegated powers. All loans sanctioned by up to RO head CAC or CO head CAC can be legal notice can be issued by the respective authorities. Okay, RO heads can issue or CO heads can issue for all the loans sanctioned up to including RO head CAC, he can issue. Branches cannot issue. Similarly, all loans sanctioned by up to CO head CAC, so he can issue that is legal notice. Legal notice can be issued circular to CAC even for all the loans sanctioned by HO. Whomsoever is authority in HO up to MC power accounts. So legal notice can be issued by circular to CAC. So for the legal notice, even though the loans are sanctioned by that is HO authorities. Now let us quickly see the question, whether we are able to answer the question. The questions are there. We'll see. Okay, it has not yet come, sir. It has not yet come. Timeline I have not covered. I have not yet come. I will come to that. We'll come to it now. Okay, these points please note down. Then, other points in the compromise formula. What is the timeline before which the OTS that is approved by the bank, the borrower has to pay fully? Whether time can be given or immediately on the same day he has to pay. If time is given, which authority can given how much time? So next point, even if they give time, whether interest to be charged for that time. Third one, whether even if he pays the money within the time, anybody has the authority to waive the interest. Fourth point, so he has not paid the money within the time, whether interest to be charged. So if the interest to be charged, whether it can be waived by any authority. We are going to see it now. Okay, questions will come. Last 2 years, questions have been asked from this point. So recover maximum amount at the time of settlement, either 10 to 15%, try to recover and get the post-dated checks from the borrowers. Timeline for payment of OTS amount. What is the timeline? If the OTS is settled by branch, I told you branch power accounts, AGM, DMs, SM branch, ARM branch, and BLBs, CLBs, other specialized branches have power for waiver of legal action, all those things we saw. If the OTS proposal comes under the branch power or RO power, so maximum 3 months time can be permitted for paying the OTS amount by the borrowers, either in installment or in one lump sum. So for CO sanctions, sanctioning authority at CO can give maximum 6 months time for settlement for fully paying the OTS amount. For HO sanction, sanctioning authority at HO starting from CGM, GM, HO, CSE till it goes to MC of the board, they can give 18 months time. Now, so branch RO CO sanctions for a longer, so branch maximum power is 6 months. RO sanction maximum 3 months. CO sanction maximum 6 months. Suppose a sanction is made by a branch or sanction is made by an RO. The time is given only 3 months. So now the party says, I want 4 months. Or the party says, I want 5 months. Or the party says, I want either at the branch sanction or RO sanction or CO sanction. If they want a time beyond the stipulated time power given to the branch RO or CO, who has to permit? So CGM, GM, HO, CSC has to permit, but the overall time permitted should not exceed 18 months. Okay, branch ROCAC sanctions for a longer repayment period within the overall 18 months to be permitted by CGM, GM, HOCAC to permit. So RO sanction 3 months time your RO has given. He wants 4 months. You cannot go to CO, you have to go to HO. So maximum time can be given only 18 months from the date of sanction of the OTS because HO has power only for maximum 18 months. Okay. So now if 12 months have already over from the due date, let's assume OTS is settled today, HO power, HO has given 18 months time. 18 months means 1 year, that is 1.5 years. So that is whether after, so he has not paid the money within 1.5 years, within 18 months. HO power sanction, 18 months time is given, but he has not paid the money within 18 months. Whether he wants, that is, he is going beyond 18 months, he comes and pays the money beyond 18 months. Like that, beyond 18 months, within how much time he can come and pay the money. There is a delay. Anybody can condone the delay. Any interest to be charged from him. So any delay, that is beyond 12 months. So that is if 12 months have lapsed from the due date as above. What is the due date? 3 months, 6 months, 18 months. That's maximum. If 12 months have lapsed from the due date given to the borrower, OTS proposals to be considered afresh only. Okay, that means up to 12 months after the time is given, you can condone the delay and get him the money. So, if beyond 12 months from the due date, you cannot condone the delay, it has to be done afresh only. So, okay, now let us see. Post-dated checks to be obtained wherever required. So now you are given time. The question is 3 months time, 6 months time, 18 months time is given. Whether for the time given, so whether interest to be charged in your OTS acceptance letter. Yes. So interest on the compromise amount to be charged is 1 year MCLR prevailing on 1/4/2025 plus 1.50 from the date of conveying the sanction till the payment made, though time is given as above is permitted. So simple interest MCLR on, I told you MCLR on 1/4/2025 is 9.10. Simple interest on MCLR on 1/4/2025 plus 1.50 to be calculated on the compromise amount, the diminishing balance if he is paying any money during the course of that period. So you have to collect even though time is given. Got my point? Okay. Now, so time is given, but he has paid within the time. 3 months you are given, within 3 months he has paid. But he comes and says, sir, please waive the interest. Sir, as per your sanction letter, I ought to pay interest, even though I clear it within the time. Now I am not able to pay the interest, please waive. The question is whether any authority in the bank has power to waive the compromise interest which is given in the sanction letter if the compromise amount is paid within the due date given by the bank to the borrower. Yes. Whether interest can be waived when OTS amount is paid within the accepted period. Whether interest can be waived when the OTS amount is paid within the accepted period. Yes, some authorities are having. If paid within 3 months from the date of communicating the order. So 3 months time till payment of OTS, interest can be waived for branch RO sanctions by the respective sanctioning authority. RO can give maximum 3 months time. See, branch can give maximum 3 months time. In the 3 month times, if they paid, so even though the sanctioning letter says you have to pay interest 1 year MCLR plus 1.50 or whatever it is, so these authorities can waive. For CO sanction, so that is up to 6 months. If they within 6 months, if you are paid the money because 6 months is the sanctioning time, so interest can be waived. Authorities at HO can interest waive up to 18 months because they gave the time of 18 months. Within 18 months, the borrower has paid, or at the stroke at the end of 18th month, the borrower has paid, and borrower is coming and asking, sir, I cannot pay the interest. Yes, HO authorities can waive the interest. Now, the next question is, we'll go to the next question after seeing this question because I want to go to the, okay. Now, question number 4. Which is the odd man out with regard to timeline for payment of the OTS amount other than special OTS. The special OTS, the timeline is different depending upon the scheme. RO sanction 3 months time, yes. Branch sanction 3 months time, yes, time is permitted. Circle sanction 6 months. HO sanction 18 months. So 1, 2, 3, 4. Which is the odd man with regard to timeline for payment of OTS amount. So HO sanction A 1 to 4 all Whether 1 to 4 all are odd man out? No. Then B, 2 only is the odd man out. C, 4 only is the odd man out. D, none of these. E, all of these. None of them are the odd man out. A is correct, 1 is correct, 2 is correct, 3 is correct, and 4 is correct. That means none of them are old man out. All of them are correct. So answer for question number 4 is point number that is D. Question number 4 answer is point number D. So this is with regard to OTS. When you give the time, the borrower pays within the time. If how much time you can give? 3 months, 6 months, 18 months. If the borrower pays within the timeline given by you, whether interest to be charged as per sanction, yes, you have to charge. Whether anybody can waive, the respective sanctioning authority can waive the interest provided the OTS amount is paid within the due date given by the bank to the borrower. Okay, now let's see the other point. If there is a delay, if there is a delay in payment of the OTS, whether anybody can condone the delay and whether we have to recover the interest from the borrower. Now, who can condone the delay in payment of OTS amount, OTS permitted? For example, you are given 6 months time from the circle. So the borrower is not able to pay within 6 months. So he is coming on the 8th month or 9th month or 10th month. So 6 months. So another 12 months, after another 12 months from the due date over only, you have to go for a fresh OTS. Okay, another 12 months is not yet over. 6 months time you are given, and the 8th month is coming and telling, sir, I am paying the amount now. So the delay is 2 months. So if he comes within the 6 months, you can waive the interest. Now he comes after the 6 months, on the 8th month, he says, I am paying the OTS amount. So there is a delay of 2 months. Suppose HO power. HO has given a sanction for 18 months. So after 18 months, on 20th month or 25th month, he is coming and asking, sir, I will pay the amount. So that is, you please condone the delay. So, and ask me not to pay any interest. So he is coming and requesting. So if there is a delay, anybody can condone interest to be charged, or interest need not be charged. Anybody can condone the delay. That is the question now. So who can condone the delay in payment of OTS permitted? When OTS amount not paid within the agreed period. OTS permitted by HO authorities. So HO various authorities are having power to waive the OTS, all of us know. OTS permitted by HO authorities other than MC of the board. MC of the board, circulate CAC can condone the delay up to 3 months. Whomsoever has sanctioned the OTS in HO, other than MC power of the board, so a circulate CAC can condone the delay up to 3 months by collecting interest at 1 year MCLR on 1/4/2025 plus 1.50 compounded monthly. So far, we have been seeing what the interest to be collected for OTS, for unapplied interest, etc. 1 year MCLR plus 1.25, 1.50 simple. Whenever it comes delay for settlement of OTS, it is not simple interest, it is compounded interest monthly. For OTS proposal sanctioned by HO authorities, other than MC of the board, if the delay is only within 3 months, circle-led CAC can condone the delay. Even though circle-led CAC can condone the delay, they have to charge the interest. They cannot waive the interest for the delayed period. So delay maybe maximum 3 months only. So circulate CAC can condone the delay up to 3 months by collecting interest at 1 year MCLR on 1/4/2025. At 1 year MCLR on 1/4/2025 plus 1.50 compounded monthly. Suppose more than 3 months, HO sanction, more than 3 months delay. So who has to condone the delay? Whether interest to be recovered 1.50 compounded monthly or not. HO power accounts, circulate CAC can waive if you can condone the delay if the delay is up to 3 months. But however, interest on 1 year MCLR plus 1.50 compounded monthly to be recovered from the borrowers. More than 3 months, HO power sanctions more than 3 months, anybody can condone the delay. This presentation tells about this paragraph. The respective authority HO, which has permitted the OTS, has powers to condone the delay up to a period of 12 months with interest at the rate of 1 year MCLR on 1/4/2025 plus 1.50 compounded monthly, or with partial full concession in interest. Beyond 12 months, the proposal will be considered afresh. So, ladies and gentlemen, so HO power accounts, who can condone the delay? If the delay is condoned, interest to be charged. That is a question. HO power accounts, two authorities can condone the delay. One authority is the circle head CAC. If the delay is up to 3 months, circle head CAC can condone the delay by charging compound interest. What is the interest? I told you. Beyond 3 months, respective authority HO can condone the delay maximum 12 months. Okay, if the borrower comes and delay is 4 months, delay is 5 months, delay is 12 months. In that case, the authority who has sanctioned at HO only has to control the delay. So whether they have to charge the 1.50 interest compounded monthly, yes, they have to charge, or if the authorities waive, they can also waive either partially or fully. HO sanctions, circulate can condone up to 3 months, but they have to charge the interest. HO power accounts beyond 3 months, respective authorities of HO can condone the delay by charging the interest. If they want to waive fully or partially also, they can waive the interest. The maximum cantonment delay is 12 months from the due date. Beyond that, the proposal to be considered afresh. Now, next one. So now CGM, GM, HOCAC can condone the... Hello? Okay, okay, okay.
Friends, we will take a 5 minutes break. We will start the class at 4:10.
So my screen is visible now?
Sir, visible, sir. The screen
But no presentation is visible, no?
Yes, sir. No presentation is visible, sir.
Okay.
Okay, sir.
So that is two, three chats I have seen. So I am not answering the chats in between. One chat is with regard to anybody is having any doubt, you can personally send me a WhatsApp message. I'll reply. So two chats I saw during this break. One is with regard to hierarchy with regard to the CACs. So the CAC at HO starts from CGM, GM, HO, CAC. Then it goes to ED, CAC. Then CAC of the board. Then MC, management committee of the board is the final authority. That is a hierarchy. And with regard to some cooling period or something like that, some question has been asked. The cooling period is with regard to that is write-off or what you say, the settled, etc. appears in the credit information reports for sanctioning fresh loans in the bank, including the gold loan. So once the borrower has cleared the entire liability, so that is by paying even the return of amount, settled amount. So according to me, that cooling period will not apply because he has already paid the money. So a credit decision has been taken after analyzing the entire CIR. A credit decision to be taken by the concerned sanctioning authority. Okay, sir. Other chats I have not seen. So any questions you have, I am available in 98403-74662. You can post the query to me. 98403-74662. I will try to clear at the earliest. Okay, sir. Now, so we have been talking about condemnation in delay. So that is after the OTS due date, maximum 12 months time will be given by the various authorities, which we have seen. So with regard to HOCAC power account, circulate can control the delay up to 3 months, but interest to be recovered. So HO power accounts, respective sanctioning authorities can condone the delay up to a period of 12 months with interest or without interest. Now, next one. So the HO sanctioned accounts other than MC power of the account circulate can that is condone the delay by collecting the interest. Similarly, so OTS proposal was sanctioned by EDCAC. Whether any authority in HO has the, so if it is circulate CAC condone the delay for 3 months by recovering the interest. But the EDCAC proposal, the delay can be condoned up to 6 months by GM, CGM, HOCAC up to 6 months, either by collecting the interest or waiving the interest. Similarly, so EDHOCAC can waive, so can condone the delay sanctioned by the board CAC and MC of the board up to 9 months by either waiving or collecting the interest. Board COC can control the delay up to 12 months in respect of sanctions made by MC of the board with interest on 1 year PLR with partial or full concession. That means waiver of so various authorities are having power to condone the delay. So with regard to HO proposals, let us see first HO proposals. HO proposals, a respective sanctioning authority can condone the delay up to 12 months by either collecting the compound interest or waiving fully. So GMC HOCAC can waive up to 6 6 months ED loan sanctioned compromise proposal either by waiving or collecting the interest. So then EDCAC can waive the proposal sanctioned by board CAC by waiving 9 months condone the delay for 9 months, like that it is there. But Circle CAC can waive the sanctions, condone the delay of HO, that is up to 3 months. So by collecting the interest, okay, that we have seen. Now the next point what we are going to see is, so OTS permitted by Circle CAC. So OTS permitted by Circle CAC, he can give 6 months time. Now, who will condone the delay? So, what is permitted by the circulated CAC? Circulated CAC can condone the delay up to 3 months by collecting interest at 1 year MCLR plus 1.50%. So, circulated CAC, what he has permitted, he can waive, so he have to condone the delay up to 3 months by collecting interest, but he has to collect interest. What he has per branch other than circulated CAC. So branch ROCO other than COCAC, next tier authority at ROCO can condone the delay up to 3 months by collecting interest on 1 year MCLR plus 1.50 beyond 3 months afresh. That means what we have got from this is various authorities are having power to condone the delay at the HO level. So at the HO level, maximum condonation will take place for 12 months. So when the authorities waive the delay in HO, various authorities can condone the delay. So they can either collect the interest or they can waive the interest or partially waive. Coming at the level of circle or RO or CO, authorities for circulated CAC sanctions can waive only by circulated CAC condone the delay, that to maximum 3 months only. However, the interest to be recovered. RO, CO, that is other authorities in CO and RO and branch sanctions, compromise proposal sanctions, delay can be condoned up to maximum of 3 months by next higher authority in the branch or CO, but interest to be collected. So this is the idea, sir, for delay, for delayed payment of interest. This is the idea, delayed payment of the compromise amount. Okay, let's quickly see whether we are able to answer the question. Let's quickly see. Okay, so question number 5, it is a little tricky question. So let's apply some mind and let us go through that question. What is not correct with regard to the interest to be charged with regard to payment of OTS amount? So what is not correct with regard the interest to be charged with regard to the payment of the OTS amount? Within the permitted time, 1 year MCLR on 1/4/2025 plus 1.50 simple from the date of conveying sanction till the payment. Yes, interest to be charged. If the authorities want to pay, they will pay. That is a different issue. So permitted time is 1 year. Within the permitted time, if the borrower pays, 1 year MCLR plus 1.50 from the date of conveying sanction till the payment of OTS to be recovered. Authorities HO who has permitted the OTS. So first point is A correct. Point number B. Authorities at HO who has permitted the OTS has powers to condone the delay up to a period of 12 months with interest at 1 year MCLR on 4/2025 plus 1.50 compounded monthly. Okay, yes, if you want to weigh, they can weigh. Okay, so which is not correct? The question is which is not correct. Point number C. What is permitted by HO, circulated CAC can condone the delay up to 3 months by charging 1 year MCLR on 1/4/2025 plus 1.50 compounded monthly. So which is not correct? None of these. None of these are not correct. That means all of them are correct. See, waiver is something different. So when you permitted time, within the permitted time, if the OTS is paid, then also you have to charge a simple interest. Within the permitted time, it is not paid, condonation of delay will take place. Who has to condone the delay? Whether interest to be recovered or not. Normally, interest to be recovered. So the waiver of interest is the next discretion of those authority. 1, 2, 3, 4, that is A, B, C, D, all are correct. So none of them are not correct. Question number 5, answer is D. Okay, question number 5, answer is D. Now, we will go to the next presentation. So, we have seen. Now, with regard to other points in the compromise, prior approval of ECGC, CGTMSE, etc. is a must and the same to be incorporated in the sanction. So, the approval from them is required before giving an OTS proposal. Inform CBA and police and wait for 14 days. After 14 days, if you don't receive any communication from the police authorities, sanction to be communicated, where there is sanction to be communicated to the borrower. If police authorities are selling that, don't give the sanction, don't give. No reply is received from the police authorities within 15 days, we can convey the sanction. Inform the court DRT through panel advocates in the case of the court pending cases. In the sanction minimum period of 7 years, the account will appear as settled in the records of the CICs as per CIC Regulation Act 2005 to be mentioned. In the sanction, we have to tell we are going to settle your account. Because of that, your name will appear as settled in the credit information reports of the credit information companies up to a period of 7 years. So this is as per CIC Regulation Act 2005. Once they ask the question, borrower's name will appear up to what period as per which act? The act is CIC Regulation Act 2005. Suit filed account sanction draft to be approved by legal section. If it is a suit filed account, before conveying the sanction, it has to be approved by the legal department. If the OTS does not materialize in 2 offers, so first OTS does not materialize. So 12 months time you are given, 18 months time you are given, not materialize. Again, afresh you are giving an OTS. So OTS is settled. Even in that case, he is not paying the money. Then what to do? So you have to go in for the normal recovery measures. Okay. Now there is a concept called recovery committee at HO. So this loan recovery policy 218/2025 or 25/2025. Afterwards, in HO various verticals have been formed under each wing. So because of the formation of verticals at HO under various wings, the HO recovery committee also underwent a change. Okay, 352/2025 is the circular in which recovery committees at HO members and chairman of the recovery committee underwent a change. We are going to see all OTS power of HO power accounts to be placed before the recovery committee first. So any OTS proposal which goes to HO first to be placed before the recovery committee, and with the recommendations of the recovery committee only, it has to be placed to the next next CAC, whether CGM CAC, recovery, that is compromise CAC, OTS CAC, appropriate authority, sanctioning authority, it will be placed after getting placed before the recovery committee at HO. So who are all the members? Who are all the chairman? General Manager of Recovery Vertical of Credit Administration Recovery Wing, so shall be the chairman of the Recovery Committee, and in his or absence, GM of Stressed Asset Management Vertical will be the chairman. So verticals are headed by general managers. So General Manager of Recovery Vertical of Credit Administration Recovery Wing will be the chairman, and if the General Manager of the Recovery Vertical is not there, General Manager of the Stressed Asset Management Vertical will be there as the chairman of the committee. Members, 2 sets of members, wing heads. So wing heads of financial management wing, risk management wing, operations and strategy wing, resources and government services wing, they are all the members. So chairman, I told you, now members of the recovery committee of HO. So then other set of members, general managers of the following verticals. So wing heads, first one is wing head, second one is general manager of the following verticals. Recovery vertical, SAM, stress asset management vertical, law, that is uh, legal and fraud prevention vertical, general administration and credit monitoring vertical. Quorum shall be any 3 members other than the recovery and stress management verticals of credit administration, because the recovery GM, recovery vertical GM or stress asset management vertical GM are the chairman. So other than these 2 members, at least the quorum should be 3 members other than these 2 members. This is the new HO vertical, that is recovery committee formed at HO. Then that is when with the recommendations of this committee only, the proposals to be placed to respective committees who are delegated powers. The recommendations of the HO recovery committee is valid for 6 months. Besides the OTS proposals, which are all the things to be placed before the recovery committee? Let us see. The following proposals are also to be routed through the recovery committee before placing to sanctioning authority. What are they? Reserve price fixation for sale of assets to asset reconstruction companies, securitization company, release of guarantors with or without release of securities, release of securities of guarantors without releasing the personal guarantee, entrustment of cases to forensic audit. All these cases other than the compromise HO power compromise proposals also to be routed through the HO recovery committee 352/2025. In HO, we have one more committee called Settlement Advisory Committee, which proposals to be placed before the Settlement Advisory Committee, who are all the members, what is the quorum, and who is the chairman of the committee. Two retired judges of High Court or Supreme Court should be the member, and two former bankers not below the rank of an executive director of the nationalized bank or deputy managing director of SBI. Okay, so two people from the banking industry, the rank I told you, two retired judges of High Court or Supreme Court, and one retired person from an external agencies should be the members as per the guidelines. The senior most retired judge is the chairman. Quorum, two of which at least one judge must be there. So retired executive director of Canara Bank and Syndicate Bank cannot be the members. As of now, bank has not employed the external member, so we have only 4 members in the Settlement Advisory Committee. Which are all the things to be routed through the Settlement Advisory Committee? All OTS proposals involving total sacrifice amount of rupees 1 crore and above, and sale of assets to ARC banks involving similar sacrifice. So sacrifice amount involving 1 crore and above. All OTS proposals involving sacrifice amount of 1 crore and above and sale of assets to ARC banks with the same amount of sacrifice to be placed to this committee for views and then to the sanctioning authority. The recommendations of the committee is valid for 12 months. So I told you about a recovery committee in HO and what are all the things to be placed before the recovery committee, what is the validity of the sanction given by the recovery committee. Then I told you about a committee called advisory committee, who are all the members and what is the quorum, who is the chairman of the committee, and what proposals to be placed before the settlement advisory committee, because all sacrifice amount up to 1 crore and above to be placed, even sale to that is asset reconstruction companies where sacrifice involved 1 crore and above to be passed to the committee. So who are all the members, who are all the chairpersons, and what is the validity of the recommended declaration of the settlement advisory committee? It is 1 year. For 12 months it is valid. Okay, sir. Now let us see whether that question we are able to answer. Next, other question. What is the question number 6? Question number 6 and 7. Take the question number 6. Which is the odd man in respect of recovery committee constituted head office as per HO Circular 352/2025? Okay. So wing head of recovery wing head of financial management wing, general manager of stressed asset management wing vertical, general manager of general administration and credit monitoring, and none of these. So which is the odd man in respect of recovery committee constituted HO? If you see the slide, so you will not get the person as wing head of recovery wing. So which is the odd man? Wing head of the recovery wing is not a member of the recovery committee at HO. So question number 6, answer is A. So which is the odd man out? Question number 6, answer is A. Question number 7, tick the correct answer. Question number 7, tick the correct answer. I think one question I have left out is that. Okay, nothing is left out. Question number 6. Which is the odd man out? We saw. Question number 7. Tick the correct answer. Recommendations of the recovery committee at HO is valid for 6 months. Settlement committee recommendations are valid for 6 months. Entrustment of forensic audit to be placed to recovery committee. Recovery committee circled. Sale of assets to ARC to be routed through HO recovery committee. All are correct. Tick the correct answer. Question number 7. Tick the correct answer. According to me, point number A is only the correct answer. What is the answers we will see? Recommendations of the recovery committee is valid for 6 months. Correct. Settlement committee recommendations are valid for 6 months. No, it is valid for 12 months. So point number B is not correct. Entrustment of forensic audit to be placed to the recovery committee of the circle. No, recovery committee of HO. So point number C is also not correct. Point number D, sale of assets to ARC to be routed through HO recovery committee. No, not sale of assets. That is fixation of reserve price for sale of assets. Fixation of reserve price for sale of assets to be routed through the HO recovery committee. So D is also not correct. So tick the correct answer. Question number 7, answer is A is only the correct answer. Others are wrong answers. Question number 1. Question number that is okay. Now let us go to the there is presentation. Let's go to the presentation. Let's see the presentation now. Okay, recovery committee visa, settlement advisory committee visa, some questions also visa. So, what is the format in which we have to submit the OTS proposal? If the sacrifice amount does not exceed rupees 50,000 in each account, OTS proposal as per HO Circular 115/2013 and in other cases NF 724. I need not tell you. Realizable value of security is as per the valuation report given by the panel valuer, which should not be more than 1 year old as on the date of OTS. So whenever the OTS proposals are coming, on the date of placing the OTS proposal, we have to see what is the validity of that valuation report. You should not have completed 1 year on the date of OTS proposal. CGM, CM, CGM, HOCAC can relax this condition. Branch to certify about the photograph, property, etc. in the proposal note. Whether one valuation is sufficient for OTS or two valuations to be taken. You read this point. If the original value of the mortgaged property is more than rupees 5 crores, if the original value of the mortgaged property, original value at the time of sanction of the loan, what was the value of the property we have taken? We have to take the loan documents and we have to see. We should not see the present value at the time of account becoming NPA. When the original value of the mortgage property is more than 5 crores, then two valuations to be obtained. Higher of the two to be considered for the OTS proposal. Suppose in respect of certain securities of immovable properties which were valued at more than 2 crores at the time of last sanction renewal. So the last sanction or renewal, based on the valuation report, what it was done, the value was more than 2 crores. Now, when the account becomes NPA, when you are taking a valuation report, the value has come down. So renewal and the reduction in the present value is more than 30% of the same. In such cases also, to ascertain the exact valuation, two valuation reports should be obtained and analyzed for reduction in the value before placing to the competent authority for accepting the OTS proposal. So if the original value of the property is 5 crores and above, take two valuation. Higher of the value, take for OTS. And in the other case, in the case of an original value is 2 crores. Now reduction at the time of NPA is more than 30%. Take one more, analyze and make it to the appropriate authority what value we have to take for that OTS proposal. So when two valuation to be taken, in these two cases, two valuation to be taken. At each time whenever you go for OTS, the valuation report should not be more than 12 months old. Guidelines for no issue or no due certificate. If the borrower pays the entire contractual dues, so you can give the no due certificate. If settled under OTS, a clause that the borrower settled the dues under OTS is to be incorporated in the no due certificate. It is fully written off without any OTS. No due certificate should not be issued unless dues are paid or settled later. In respect of group accounts settled under compromise OTS, unless the borrower repays the amount under each account in terms of OTS, no due certificate should not be issued. Now the next point is, so that regarding the no due certificate, we have seen. Now we saw what is the amount we have to recover for a compromise of an account. Okay, and who is the sanctioning authority? So far we have seen. Now the question is, there are guarantors and co-obligants. They are coming to sir, please release our personal guarantee. Keep the security created by us. So they are given some security, you keep it, don't release it, but please release our personal guarantee. Or some of the guarantors will tell, sir, you release our securities, but you continue to keep our personal guarantee. So whenever a third party property is taken for a loan, the personal guarantee also should be taken. All of us are aware. So, or a third party property is not taken also, personal guarantee of the guarantor should have been taken place. Proper loan document would have been taken. So the when the borrower is not coming for repayment, the guarantors or co-obligants are coming and telling, please release our personal guarantee. Please keep the property created by us. Or somebody will come and tell, please release the property. Please keep our personal, you personally pursue against our property you release from the bank. In such cases, whether that can be done. And if it is so, what is the amount the guarantor or the co-obligant has to pay to the bank? or who is the authority to do that type of releasing the personal guarantee or releasing the property of the borrower? That is the question now. Release of the guarantor or co-obligant personal guarantee with or without release the securities created by them. One possibility is they come and tell, sir, please release our personal guarantee, please release the securities created by us. Or, sir, please release our personal guarantee, keep the securities created by us. So anything they will tell in such cases. Who is the authority to permit all those things? Accounts monitored by head office. Account monitored by head office. CGM HOCSE has to permit. Other than HO monitored accounts, circulate CSE has to permit. In the case of willful defaulters and fraud cases, MC of the board only has to permit. Now, how much to be recovered from them? When you are releasing the personal guarantee, how much the amount to be recovered from them? Realizable value of the security in the name of the guarantor is sufficient to cover the dues, only full liability. If not, book liability plus simple interest on 1 year MCLR plus 1.50. Realizable value net worth of the guarantor is sufficient, then book liability plus simple interest minus 0.50. The first table which I saw, no, the same logic now. Both are not sufficient, maximum to be recovered. So when they are coming and asking you to release their personal guarantee with or without releasing the securities created by them, so these are all the authorities to whom has the power, and this is the amount to be paid by them. Any deviation in this amount which is to be paid by them to be placed before the next higher authority. The other possibility, release of securities created by the guarantor. Sir, I have mortgaged my property, guarantor's property. Please release it, but you keep my personal guarantee. So, release of security created by the guarantor or co-obligant without releasing the personal guarantee. Who has the power? So, power is HO monitored account CGM, GM, HO, CAC, then circle monitored account circle at CSC, willful and fraud cases, MC of the board. The same as per the previous slide. Now, but here, what is the amount you have to recover? Here, what you are doing, you are releasing the security. Personal guarantee you are keeping. In that case, what is the amount you have to recover from the guarantor? The amount offered should not be. Here, there is no formula. You are releasing the security given by the mortgager, but you are keeping the personal guarantee. In such cases, what is the minimum amount to be recovered from the guarantor? The amount offered by the guarantor should not be less than the market value of the security as per the valuation report, not more than 1 year old as on the date of proposal, or the total dues in the account, whichever is lower. In between the two, whichever is lower, you can accept. The authorities will permit him to either to release the security created by them without releasing the personal guarantee. So what is the amount they have to pay? So as per the market value, latest valuation report, or the amount which they have to pay, between the two, whichever is less you take and release the securities from the guarantor or the co-obligant. This is one more point. Then now, all like loan sanctions by branches to be reviewed by next higher individual authority at RO or CBO. If the branches coming under RO, it has to go to RO. If the branches are coming at CBO, it will go to the circle office CRM section or something like that. Now, similarly, that is OTS sanctions also to be reviewed by the next higher authority committee. In the case of a loan, individual authorities will review. In the case of your OTS proposal, next higher committee at CO or HO has to recover your OTS proposal. What is the periodicity? Review of compromise sanctions. All OTS to be reviewed by next higher review authority committee on a monthly basis. Next higher review committee on a monthly basis. So this is the periodicity. Sanctions by executive director CAC. Sanctions of the OTS by EDCAC. CAC of the board to be done by. So sanctions made by EDCAC, CRC of the board to be reviewed by MC of the board on a quarterly basis. All other sanctions to be done on a monthly basis by the next higher review committee, and in the case of EDCAC and CRC of the board OTS sanctions to be reviewed by the MC of the board on a quarterly basis. So reviews, regarding the review, there was a question once. That's why I have put this slide to you. Now, quickly we'll go through. We have to go to the special OTS. We have to go to the special OTS. Now, before that, we'll quickly go through these questions. Then we'll touch upon the special OTS. I will try to finish the special OTS on this question paper today. Question number 8. Question number 8, you see. Which one of the following, which one of question number 8, which one of the following is not a correct statement? All compromise sanctions to be reviewed by next higher review committee. The periodicity of review is monthly in respect of all OTS. ARM SAM branch OTS sanctions to be reviewed by next higher review committee at CBOA before communicating the sanction to the borrowers. None of these, all are correct. So, which is not a correct statement? All compromise sanctions to be reviewed by the next higher review committee. Correct. The periodicity of review is monthly in respect of all OTS. No. The periodicity of review is monthly, not in respect of all OTS. In respect of OTS of EDCAC and CAC of the board, it is quarterly. Okay, point number B is not correct. Point number C, ARM SAM branch OTS sanctions to be reviewed by next higher review committee at CO before communicating the sanction to borrowers. Correct. C is correct. So none of these, all are, point number E, all are correct. So as per this one, for question number 8, point number B is not correct. The periodicity of review is monthly in respect of all OTS. That is not correct. Now we are going to special OTS scheme of the bank. Quickly we'll go through. It is going to be 4:45, maybe 5:15. I will wind up the show. So recovery we will take up. Now there are special OTS scheme for the bank. From these questions, what type of questions will come from that? The questions, generally I have seen the questions from this type of special OTS. In the case of special OTS, so that is, which are all the accounts that can be brought under special OTS? The loan account should have been sanctioned before certain date. The book liability should have been up to this much. So these are all the accounts that can be brought. Which are all the accounts that cannot be brought under special OTS scheme? Then who is the sanctioning authority for the special OTS scheme? So these are all the few, and then what is the settlement formula for some of the special OTS scheme? So these are all the questions that may come from the special OTS scheme. So there are 4-5 special OTS scheme. I will quickly go through it, and questions I think we have seen up to question number 8. Another 4 questions also we will finish today. So there is a special OTS scheme for settlement of NPAs in MSME, micro, small, medium enterprises. Last year, besides this MSME, there is a special OTS scheme for MSE only, micro, small enterprises. Now this year that has been removed. So we have one special OTS for MSME only. So which are all the accounts you can bring under the special OTS? NPA is classified as doubtful and loss asset. It should not be substandard. NPA is classified as doubtful and loss, and the category is MSME with book liability of 200 lakhs and below as on the date of settlement. So that is, these accounts you can bring under, that is, settlement for special category OTS, special OTS under MSME. Surface action initiated account, suit filed account, decreed accounts, all these accounts are eligible. Accounts covered under CGTMSE, no, you have to bring under the normal OTS only. Accounts where CGTMSE cover is rejected by the CGTMSE, those accounts can be covered. Willful defaulters and fraud cases are not covered. Immovable securities, if any, should have been brought for action at least once before this OTS. Scheme is valid from 1/4/2025 to 31/3/2026. So what is the settlement formula? So if it is a doubtful asset, 2 types of settlement formula. This you have to remember by heart, no other option for you. So settlement formula for a doubtful asset in MSME, settlement formula for a loss asset in MSME, which are all those accounts, liability that is up to 200 lakhs. So which are all those accounts you can cover, I also told you. And then what is a settlement formula? So if it is a doubtful asset, so if the realizable value alone is sufficient to recover that is total liability, then book liability up to, the book liability up to 10 lakhs, 85% of the book liability on the date of settlement you have to cover. If the book liability is more than 10 lakhs up to 100 lakhs, so 90% of the book liability on the date of settlement you have to cover. And when the book liability is more than 100 lakhs up to 200 lakhs, you have to cover 95% of the book liability on the date of settlement. There are 2 things, book liability and book liability on the date of settlement. What is the difference between the two? Book liability means on the date of account becoming NPA. That is called book liability. We can also use the word book liability on the date of NPA. The business object report will give that the report, business intelligence report. What is the book liability on the date of settlement? So subsequently, after the account has become NPA, you would have debited some charges like lawyer charges, court fees, etc. Or some amount the borrower would have paid in that money. So those accounts would have been credited or debited. So on the date of settlement of the account, what is a book liability? We should see. Book liability on the date of becoming. So whenever we say book liability, it is a liability on the date of becoming NPA. So for settlement, it is a book liability on the date of settlement. Okay, this is the formula, sir. Let us not spend much time over there. And if it is a loss asset, if it is a loss asset, straight away. If the book liability is up to 1 lakh, 30% of the book liability on the date of settlement. If the book liability is above 1 lakh up to 10 lakhs, 35% of the book liability on the date of settlement, like that it goes. So book liability up to 200 lakhs. So you can bring under this OTS, and on the date of settlement, what is the book liability? On that, this much money to be recovered from the borrower. This is for MSME, NPAs, either doubtful or loss asset. So for total dues up to 10 lakhs, branch in charge can decide about the value of the security. If the value of the security is more than 10, because for MSME loans, you would have taken the security. If the value of the security is value of the due is more than 10 lakhs from the borrower, valuation report should be there, which should not be more than 1 year old. 25% of the recovery to be obtained at the time of settlement and balance 75 within 3 months in 3 equal installments. You see that 10 to 15% we have been recovering. 1 minute. So if you see there in the normal settlement, 10 to 15% we will recover and then timeline is given. Here in the special OTS, 25% of the recovery at the time of settlement, balance 75 within 3 months in 3 equal installment. Another 3 months time is also permitted with interest at 1 year MCLR plus 0.50 from the date of OTS sanction till final payment. This is with regard to payment. Then we have an OTS for agriculture NPA accounts. For OTS for agriculture NPA accounts, we have two types of OTS. Both we will see here. That is HO Circular 628 by 2024. It is reproduced in your current year loan recovery policy. What is the settlement formula? So sanctioned agricultural limit up to 50 lakhs for a borrower under agriculture. All agricultural loans combined limit up to 50 lakhs can be brought under OTS for a borrower. If it should be in NPA for more than 12 months from the date of NPA. So it should be more than 12 months. Repeat. So that means it should be a doubtful or loss asset. Whether substandard assets can be covered here. And so in the case of a MSME, substandard assets are not covered. Special OTS for agriculture, combined sanction limit up to 60 lakhs. So that is substandard accounts also can be covered. What type of substandard accounts can be covered? So repeatedly restructured accounts under substandard up to a combined sanction limit of repeatedly restructured accounts under substandard up to a combined sanction limit of 5 lakhs is also eligible after 6 months from the date of NPA. So if the combined sanction limit is up to 5 lakhs only, substandard accounts are covered, but in that substandard category, you should remain for 6 months or more. Restructured, that is repeatedly restructured accounts means restructuring has been done at least 2 times before the account becoming NPA. Okay, sir, that is with regard to the agriculture. Then what is the settlement formula? So if it is up to 5 lakhs, either doubtful or loss, or combined limit up to 5 lakhs repeatedly restructured for more than 6 months in the case of a substandard asset, the settlement formula is original loan amount disbursed less the settlement formula is original loan amount disbursed less recoveries, including that is agriculture debt relief scheme. If the combined sanction limit is above 5 lakhs up to 25 lakhs, if it is doubtful asset, original loan disbursed plus 6% simple interest, and if it is above 25 lakhs up to 50 lakhs, it is 7% interest to be recovered. So loans sanctioned above 5 lakhs up to 25 lakhs, it is DA2. So original loan disbursed 4%, and if it is above 25 lakhs up to 50 lakhs, it is 5%. So that the different color I have given what interest to be collected, simple interest for the OTS settlement formula. Loan sanctioned above 5 lakhs up to 25 lakhs, it is DA3. So you have to collect 3% and 4% if the combined limit is above 25 lakhs up to 50 lakhs. Figure in bracket for more than 25 lakhs up to 50 lakhs. So if it is a loss asset, more than 5 lakhs up to 50 lakhs loss asset, then you will go in for original loan amount disbursed, less recoveries, including recoveries under agriculture debt relief scheme, no interest will be charged. So this is for agricultural loan, OTS, combined sanction limit up to 50 lakhs. Okay, OTS formula. So these are all the things. But there, the question, sometimes they ask the question, for these type of loans where the combined sanction limit up to 50 lakhs or combined sanction limit up to 5 lakhs in the case of a substandard repeatedly restructured 6 months and above, if you settle the account, whether fresh loan can be given to the borrower. Yes, fresh loan can be given. How much you can give, within how many days of giving the OTS payment you have to give, who is the sanctioning authority. Granting need-based finance to borrowers who have settled their dues under the above formula. Non-willful defaulter, weaker section for gainful activities. Bank has give KCC facility. Maximum fresh loan is as per scale of finance or the original sanctioned amount for the OTS settled account, whichever is less only can be given. Within how many days? After 7 days of payment of all the dues as per OTS, you can sanction this fresh KCC. Respective sanctioning authority delegated with power who can sanction the KCC. CBS fast path CAX 14 to be used for enabling custody for granting the loan. All terms and conditions of the KCC loan to be in place. Okay, so we can give. Then special OTS for small value NPA. So in the case of MSME, book liability up to 200 lakhs. In the case of agriculture loan scheme, combined sanction and agriculture up to 50 lakhs. Then we have another special OTS, small value OTS. What do you mean by small value OTS scheme? So small value OTS means, again here they are doubtful. You see, MSME also doubtful and loss. Agriculture up to 5 lakhs only, substandard, repeatedly restructured above 6 months. Otherwise, all are doubtful and loss only. In the case of small value OTS also, it is doubtful and loss only. Outstanding for more than 1 year as NPA. That means doubtful and loss. Book liability 50 lakhs or below as on the date of NPA. Last year, the book liability was 25 lakhs or below. This year, they changed the book liability up to book liability 50 lakhs or below. You can bring under OTS other than agriculture under small value this NPA special OTS scheme. Total limit sanction not more than 50 lakhs per borrower. All loans other than agriculture, suit filed, etc., is eligible. If there is GL housing loan mortgage, it is not eligible. Canara budget, other salary, there is no provision for available for recovery, that is also eligible. Any of willful defaulters and fraud cases are not eligible. So what is the OTS formula? So the OTS formula is given here. So special OTS formula for small value NPA settlement formula. So if it is a doubtful asset, if the book liability is how much we got to recover. So the recovery is based on the book liability as on the date of settlement. Eligibility is book liability on the date of NPA as per the business intelligence report. These two things you keep in mind. And if it is a doubt loss asset, what is the settlement formula? These numbers I need not read from the slide. You have to know it. Special OTS for what is small value NPA, book liability combined all the loans up to 50 lakhs, doubtful and loss. So what is the delegation of that is what is the compromise formula for doubtful asset and for that is loss asset. It is a compromise formula. So this is the amount you have to recover 10 to 15%, balance 3 months in 3 month installments, etc. So delegation is as per the loan recovery policy. Normal compromise, what is a delegation? No, based on the sacrifice or loan sanctioning authority one higher than the loan sanctioning authority. Out of the three, whichever is higher, that authority only has to sanction the OTS. No, same formula for that. So then we have a special OTS for educational loan. CEL up to a sanctioned limit of 7.50 lakhs with no security, So then doubtful and loss assets as on the date of settlement is only eligible. Again, you see, doubtful and loss. Only in some cases, the substandard assets have been brought into for special OTS. That means within 12 months, there are a lot of possibilities of recovering the account. So don't bring them under special OTS. So it should be doubtful and loss asset. And then here you see this point is very important. So in the remaining three cases, what we saw, we are not given which are all the loans sanctioned before which particular date. So here, the book liability, the sanction limit should be less than 7.5 lakhs. And not only that, it should have been disbursed before 31/12/2000, that is 17, short duration crop. Short duration courses. So the short duration courses is up to 2 years. The loan should have been sanctioned before 31/12/2020 or eligible. So loan quantum, sanctioned limit, and loans disbursed before this date only are eligible. EL on a standalone, even though the borrower is having other types of NPA accounts, EL on the land standalone basis one can also be considered. Student borrower earning more than 25,000 rupees per month is not eligible. So this question they ask. So loans covered under credit guarantee fund scheme for educational loan and other things that is not eligible to be covered under the special OTS. So that is here also. So all loss and doubtful assets only we are bringing under the special OTS for educational loan. Two types of formula for restructured accounts. So for restructured NPA account, there is one formula. So based on the book liability, and for there is non-restructured account, there is another formula is that this is the money you have to recover. Then special OTS for special OTS for tractor and farm mechanization loan. So NPA accounts more than 12 months old from the date of NPA. Again, you see loss and doubtful. Disbursement before, so this date is important. Disbursement before 31/3/2020, land holding not more than 16 acres, original loan not to exceed 10 lakhs. Standalone basis, even though when other loans are there, you can permit. Sanctioning authority as per the loan recovery policy. So what is the settlement formula? Loan sanctioned on or before 31/3/2017, the base amount to be recovered. Once they ask the question, what is base amount? So loan sanctioned from 1/4/2017 to 31/3/2020, it should be 31/3/2020, base amount plus 1 year MCLR on 1/4/2025 minus 5.50 simple. What is base amount? Amount disbursed plus expenses in that loan account minus recoveries, minus relief under agriculture debt waiver scheme and debt relief scheme, anything credited by the government also you can exclude. 10 to 15% on the date and then balance within 3 months without any interest. So special OTS for tractor loans and farm mechanization. Then we have one OTS called EOTS. One more OTS, we'll finish. Book liability more than 25,000, but contractual liability up to 10 lakhs. Last year, the contractual liability was up to 2 lakhs. This year, it is increased to 10 lakhs, classified as loss asset only. Then suit filed accounts, decreed accounts, non-suit filed accounts or non-fraud cases all eligible. Canara budget and other salaried accounts are also eligible. So GL, they are not eligible. Covered under CGFMU are not covered. Staff accounts, so then settlement formula. So book liability more than 25,000 up to 2 lakh, the settlement formula goes. Then who is the sanctioning authority for EOTS? CGM, GM, HOCAC is constituted as sanctioning authority because everything done by online and it is reflected in the books at HO level. Sanction letter can be downloaded on payment of 10% or full amount. No due certificate can be downloaded on payment of full OTS amount. That is, acknowledgement can be downloaded for each payment. All transactions will be reflected in the books on T+1 day basis. Branches ROCO can generate relevant reports in stressed asset follow-up and litigation solutions. SAFL solution, expand SAFL solution. So SAFL means stressed asset follow-up and litigation solution with regard to that is EOTS. And the last one is special OTS for NPA. I told you for special OTS NPA, two types of things are there. combined sanction limit up to 50 lakhs. That is one formula. Now it is NPA agriculture combined sanction limit up to 1.60 lakhs. The combined sanction limit up to 50 lakhs. So if you settle an OTS, you can give KCC to the borrower, the resettlement borrower. Here, we are also going to give some other loan, we will see. So special OTS for combined agriculture limit up to 1.5060 lakhs, where no collateral security is available. Account should have been sanctioned on or before 31/3/20. These things they are asking. For the special OTS, so which is not correct, which is correct. So they are giving the eligible date. So the eligible date we should know. Account should have been repeatedly restructured minimum 2 times. Account should have been classified as substandard and more than 3 months old. Here you see, for special OTS for agriculture, combined limit up to 5 lakhs, it should be repeatedly restructured minimum two times, NPA more than 6 months. Here, so repeatedly combined limit up to 1%. Here OTS limit up to 1.60 lakhs, and then where no collateral security is available, loan sanctioned before 31/3/2023, repeatedly restructured minimum 2 times, substandard for more than 3 months. So these points you should know. Then if it is not repeatedly restructured, it is not eligible. Besides this, so only in 2 cases we have seen substandard assets brought under special OTS. Otherwise, in all the special OTS cases, we saw loss and doubtful assets only. So this is the settlement formula. So that is doubtful 1, doubtful 2, doubtful 3, repeatedly restructured minimum 2 times. So this is the simple interest, 50% on the book liability, sanctioned amount plus 5% simple interest, nothing else. This is 50% on the book liability and the date of settlement, etc. Then sanctioning authority is given here. Then there is 10% to be recovered, 25% within 30 days, 3 months time. And then that is whether any fresh loan can be given. Yes, fresh loan can be given to the borrower for these people. So for under weaker section, eligible for maximum 50,000 rupees after 3 months from the closure of the loan under settlement as per the policy. There, after 7 days, you can give the KCC as per scale of finance or the original loan amount sanction, whichever is there. That is for combined limit. Here, you can give maximum 50,000 for weaker section for living purposes after 3 months of settlement of this OTS. Now, quickly, we will go through the 4 questions. We will wind up the session. Now, question number 9. I think question number 9 we have to see. Question number 9, 10, 11, 12. Which is correct with regard to special OTS scheme for the year 25-26? For special OTS under educational loans, the and OTS under EL, loan should have been disbursed on or before 31/12/2027. Sorry, you make it as on or before 31/12/2017. I wrongly made as 27. On or before 31/12/2017, and for short duration courses on or before 31/12/2020. Point number 1 is correct. Okay. Point number, first let us see 1, 2, 3, 4 points, whether it is correct or not. First we will see, then we will go to the answer. So point number 1 is correct. For special OTS under education loan should have been sanctioned, disbursed on or before 31/12/2017, correct. And for short duration courses before 31/12/2020, correct. Point number 2, loans disbursed on or before 31/3/2020 are eligible for special OTS for tractor and farm mechanization under agriculture. Okay, that is also correct. Point number 3, for EOTS, the amount should have been classified as loss asset. That is also correct. For special OTS under agriculture, with combined limit of up to 2 lakhs, loan should have been sanctioned on or before 31/3/2023. For special OTS under agriculture, with combined limit up to 10 lakhs, I told you it is up to 10 lakhs, for loan should have been sanctioned on or before 31/3/2023. So, point number 1 is correct, point number 2 is correct, point number 3 is correct, and then point number 4 is not correct. So, okay, now the question is, so 1 to 4 all are correct. 1 and 2 only are correct. So I told you 1, 2, 3 is also correct. So 1 and 2 only are correct. No, B, we should not pick the answer. 3 only is correct. No, 3 we should not correct. Pick the answer. D, 1 is not correct. No, 1 is not correct. It's not there. No, 1 is also correct. So A to D, none of them are correct. So 1 to, what is A? 1 to 4 all are correct. No, wrong. What is B? 1 and 2 only are correct. No, that is also not, that is wrong. What is point number C? 3 only is correct. No, that is also wrong. What is D? 1 is not correct. That is also wrong. That means A, B, C, D all are wrong. So what is the answer? A to D, none are correct. So the answer for question number 9 should be E, because then how we arrived at E, we have seen one by one which is correct, which is wrong. Finally, we come to the answer for question number 9 as E is the answer. Question number 10. Which settlement formula does not match? Which settlement formula does not match for special OTS under MSME for the year 25-26? In respect of NPA in doubtful category, and if book liability is 150 lakhs, and if the realizable value of the security alone is sufficient to recover the contractual due, 95% of 150 lakhs is the minimum amount to be recovered. For loss accounts, the book with book liability of 1 lakh, 30% of the book liability is on the date of settlement to be recovered. For the book liability of more than 10 lakhs up to 100 lakhs and a doubtful, when realizable value or net worth are not sufficient to cover the contractual dues, 70% of the book liability on the date of settlement to be recovered. Here, if you see, I told you book liability means book liability on the date of account becoming NPA. So what is the settlement formula? Always the settlement formula is 150% or 90%, 80% on the book liability on the date of settlement. So two types of book liability. Book liability means book liability on the date of NPA. For settlement, book liability on the date of settlement. Point number A, you see. In respect of NPA in doubtful category, and if book liability is 150 lakhs, what is book liability on the date of NPA? And if the realizable value of the securities alone sufficient the contractual dues, 95% are bound to be is the settlement formula. 90, what is 150? 95% not of 150. What is 150? 150 is the book liability on the date of NPA. Book liability, isn't it? What I told you, 95% of the book liability on the date of settlement to be recovered, not 95% on 150. So because 150 is the book liability on the date of NPA. So 95% on the book liability on the date of settlement. It may be 150 or it may be more than 150 or it may be less than 150. So the wording should be 95% of the book liability on the date of settlement. So question number 10, answer A is does not match. Point number A does not match. Answer is A, 11. Which one of the following is incorrect statement with regard to compromise policy of the bank? Management committee of the board is the authority to permit OTS in respect of accounts of willful defaulters and fraud cases. Yes. Loans availed by employees or to which they stand as guarantor or co-obligant while in service, OTS to be permitted by MC of the board. Point number C. For full write-off without any OTS, the account should have completed 5 years or more from the date of sanction. For loans sanctioned by CAC of the board, Circlegate can permit issue legal notice. Then, entrustment of cases to forensic audit to be routed through HO recovery committee. If you see here, according to me, point number B is wrong. Because what the point number B says, loans availed by employees or to which they stand as guarantor or co-obligant while in service, OTS to be permitted by CAC of the board, not MC of the board. So it should be CAC of the board. Question number 11, B is the not correct. B is incorrect. Then question number 12, last question. Which is what is correct with regard to settlement of advisory committee at HO? A. Quorum is 2 of which one of the members who is a retired judge to present. Correct. Point number B. Senior most judge of the committee is the chairman of the committee. Correct. Point number C. The number of members in the committee as per guidelines is 5. Yes, as per the guidelines, it is 5. Correct. All OTS proposals with sacrifice amount of rupees 1 crore and above to be routed through the committee. That is also correct. I should have put one more option. All of D, all of them are correct. So A, B, C, D, all are correct. Which is correct? All are correct in this question. Okay, so ladies and gentlemen, so it is around 5:10, 5:15. So we are winding up the session for the day. So I have to take up with you only for the NPA portion, particularly the SARFASI action, fixing the reserve price, and important points from the examination point of view. So if any time is given to me during the evening, during the coming week, so I will try to cover that one also. Thank you very much and all the very best.
Sir, thank you, sir. We will write it up, sir. Thank you, sir.
Okay.
Okay, sir.